Alrighty, welcome to Avery Idea Day 2023. This is Sean Emery, the founder and partner at Avery and Company. Today we dive into some of the latest investment trends that we believe are shaping the future. We have various guests joining us today to really break things down. We're excited to have some individuals such as Anurag Rana, the head of technology at Bloomberg on the Bloomberg intelligence team. We have Ryan Engel, the founder and CEO of Golf Plus VR, one of the more successful companies slash games, within Meta, Oculus, Quest ecosystem. We have Brad Hussey joining us today. He's one of the leading content creators with 600,000 plus people that have taken many of his content related courses and is a brand partner of Wix.com. We have Ethan Chernovsky from Placer AI. Good to see him come back on and discuss, foot traffic location data, better understand, some of the trends within retail, within consumer behavior in general. We have Sean Saint from G2. He's going to talk about some of the largest and most exciting companies within software. At G2, they're one of the largest software marketplaces, have access to major trends within, technology and more. We have Seema Shah from Sensor Tower, and she will discuss, some of the trends within the app downloads and engagement around some of the companies, in 2023. And as we, start off the beginning of 2023 or 2022 figures as well. Before we move into these conversations, let's discuss, some of the major secular trends that we're exploring, but also how do we get to them? So here's 10 major trends that we are following. And you can see everything here from automation to digital work, to commerce evolution, to the future of mobility, the future of computing, and so on. Now, for us, when we think about these, we try to go a step further. And at a high level, how do we narrow in on the opportunity? So let's take automation as an example here. When we look at automation, we essentially think about it in multiple facets. What you see here on this screen is essentially various low-hanging fruit, in our view, at least, of some of the major industries or use cases where automation could be a viable and transformative solution. So you have things like healthcare, finance, marketing, employees, warehouses, so physical locations as well. Below that, you have things like diagnostics within healthcare. A lot of automation can help source and help thereafter in terms of patient care within healthcare. We've heard many things within finance, whether it's accounts receivables, accounts payables, invoicing, accounting and tax, and admin work and communication, where automation is already today playing a clear role. Our process of sourcing these secular trends we want to invest behind really starts with questions. And those questions are formulated through everyday life. I'll take a couple examples today. Some of these problems that exist in the world, they all have solutions. And really these solutions we think are the opportunity. So we take healthcare as an example. One question we pose is, why does the US spend $12,000 per capita on healthcare costs? This number is 2 to 5x other countries. Now, how do we go about finding opportunities? Here is really thinking about it, decomposing the problem. So one major problem is medication adherence. Medication adherence, as the definition, it really occurs when a patient takes their medications according to the prescribed dosage, the right time, and on the right frequency, and obviously follows direction. The consequence really here is of, medication non-adherence. That's the problem. And it ultimately has, a direct cost such as medication waste, indirect costs such as, prolonged care, readmission, all of which combined increase the cost across the system. The next question then is, who is solving this problem in general? And if they are solving it, is this a viable investment where all stakeholders along the chain really benefit? Does the patient benefit? Does the system benefit? Do the employees benefit? And obviously from our lens, can the investors benefit as well? So, that's an example. Let's go into more detail around automation, the shift to digital work, commerce evolution, the creator economy, how computing is changing. And we'll do that right now. So our first trend is really around automation. And again, when you look at our 10 building blocks here, these have been very similar building blocks going back, 3 to 4 years ago when we also had Avory Idea Day. Some of the nuances change, but generally speaking, when we're talking about secular trends, these are multi-year and in some cases, decade-long ventures. You think of software, cloud, Salesforce, 20 years old. Some of these trends can last way longer than people expect, and have, much greater implications than I think original thesis have. So we want to start today thinking about some of them. So let's go back to automation. It's really around the integration of AI, automation technologies that really has a pretty strong potential to revolutionize industries across the board. So talk about healthcare, like we just talked about, to retail. Automation is really streamlining processes, freeing up valuable human time for more meaningful work. And that word meaningful work, I think, is such an important part of the future of automation. According to a recent study by McKinsey, it's estimated that automation could contribute up to $13 trillion in global economic activity by 2030. That's a huge number, and it's pretty easy to see why. If you think about all the things you do today, how much of that could be automated, how much of that is not meaningful work, and how much more meaningful work you could possibly do. So automation is already making a huge impact in the manufacturing industry, where robots are being used to automate some of the repetitive and dangerous tasks. And again, keyword there is dangerous. But it's not just limited to that. Automation is also being used in areas like customer service, marketing, AI-powered chatbots who are available, 24/7 to assist the customers. We talk with, Sean Saint from G2 around this topic, so we plan on talking about that. This trend around automation, we think, is here to stay, as ultimately what it does, it really does become allow technology to be more accessible to businesses of all sizes as more and more companies create consumer grade. And we'll talk about that with Anurag in our first conversation here, when we bring them on. So I believe this trend in general, is a long-term growth trend, something that we continue to actively seek opportunities in, and that's around automation. The next one is shift to work. Digital work in general, specifically COVID-19 pandemic, really accelerated the move to remote work, to hybrid work, to a little bit less time in the office, which means more tools are needed outside of the office. And we're seeing, rapid adoption here for all those digital tools, the platforms that really enable this transition. According to a recent study by Buffer, 99% of surveyed workers want to continue working from home at least one day of the week. And that's a huge number, a clear sign that the shift to kind of remote work where you want, is here to stay. As more and more companies embrace remote work, I think the digital tools, as those continue to improve as well, we're really seeing a rise in new platforms, technologies that are enabling this transition. From project management tools to virtual event tools to other types of tools around communication. The market for digital work continues to find solutions, which is accelerating the growth even further in different ways. Now, most people focus really on the toolkits for digital work, but it's also important to focus on the ecosystem or even the second and third order impacts that exist due to, workplace becoming more digital, more fragmented. Think of weekly computing or commuting, the trends within commuting. People are coming to work on certain days, maybe different days than before, or staying home on different days than before. So the commuting trends evolve, adapt, and we talk about that today as well. This changes consumption trends, consumption habits, and the spillover from digital work has implications for the restaurant sector, has implications for fitness, and hopefully with Ethan Chernovsky today from Placer AI, we can actually triangulate how foot traffic is trending, where are people going on what days of the week. So that's ultimately the opportunity, and having the data to access this is important. I think this trend in general, has a long-term trend. Companies are realizing the benefits of remote work, even the negatives of remote work, which ultimately is opportunity as well. And things like diverse workplace, workforce, more productivity or less productivity, and therefore you have to adapt to those circumstances. So we're excited to explore that more today. Creator economy, one of the trends that we want to talk about today. The rise of social media, online platforms, has really created an entirely, new economy that's, again, highly fragmented, where creators can monetize their content and reach a global audience like they never did before. According to a recent study from Business of Fashion, the creator economy is estimated to be worth 1.2 trillion by 2027. That's a huge number, but it's also a clear sign that the creator economy trend is definitely here to stay. And why do we say that? The rise of platforms like TikTok, YouTube, Instagram, Substack, Wix, and many others are giving these creators the tools, to really build followings, monetize their content in ways that didn't exist before. Again, we'll speak with Brad Hussey today. he's one of the leading content creators who uses all these tools. So we want to learn more about, what's in his toolkit and how does he see this space kind of growing and evolving, and what inning are we in? Is this the beginning or is this the end? Last but not least, and again, we touch on basically all of our trends, but we do so in a way through conversation. So I think that's important. The final one is really around, the future of computing, or just how computing is changing, because it continues to change. The rise of things like quantum computing, edge computing, the continued growth of, private and public cloud. The world of, computing in general is simply just evolving. IDC has a recent report out, and they talk about edge computing, which really has to do with, low latency, high speed computing products that, sit on the edges. So think of, computers, servers that sit inside of big facilities. We wouldn't consider those, edge computing, as much as we're talking about devices, street lights that have, some sort of computing technology inside of them. These are edge cases of which continue to grow and grow as more computing power gets put into devices that are much smaller. Autonomous vehicles, edge computing, IoT, robotics, things of that sort, I think is super important. We're also moving into spatial computing. We had the Metaverse Super Series we put out, back in December, and we had, a lot of guests talking about real use case, tangible use case of VR and AR. And that's ultimately what spatial computing is. It's being able to, have computing resources, and, when you have 3D objects, whether it's VR, AR, the types of apps and requirements, whether it's architecture, um, you know, basically highlighting many of these technologies and focused around that. So again, we think it's still early there, but some of the value being created around training, education is really starting to bear fruit, and we're highly excited about. I could keep going, but I really wanted to lay the foundation of today's event, wanted to bring on some of the guests to share their insights, their data, specifically around trends and some of these major themes, things that we're tracking, we're investing in. Before we dig here, let's give a disclaimer. And as always, these are not recommendations for the purchase or sell of any securities mentioned by us at Avery or any guest speaking at this event. Investing involves risk. And with that, let's bring on our first guest, Anurag Rana from Bloomberg. Enjoy the event. Reach out to us if you have any questions hereafter. And we hope to see you soon if you work with us or, somebody that we are colleagues with. All right. Have a good one. All righty. So first off, welcome Anurag to Avory Idea Day.
Oh, thank you. Thank you for having me, Sean.
Yeah, so we're here with Anurag Rana. For many, he doesn't really need an introduction. You've probably seen him on TV. Anurag is the sector head or the head of Bloomberg Intelligence Technology. He's one of the analysts there. He can share more about everything he covers, and that spans pretty far and wide. I think, his coverage universe, what is important or important to this conversation is really the purview of what he has in terms of some of the secular trends that we're trying to invest behind here at Avory. I think, one of the main focuses that we'll focus on today is automation, digital work, the future of computing, a lot of the things he touches. Before we jump into those, I think it's important for those that don't know you, just give us a little bit of color of yourself and, the background.
Yeah, no, thanks, Sean. So I cover the technology sector at Bloomberg Intelligence, which is Bloomberg's in-house investment research arm. So we do a lot of work on, different areas with the idea of investments. So we give people, I would say, a good overview of different sectors, credit, equities, fixed income, all the things that somebody would want to work on. And then they can make their own decisions whether they want to invest or not. So my specialization is technology companies. I cover large cap technology companies such as Apple, Microsoft, Oracle, Salesforce, Workday, IBM. So pretty much the big ones that fall in the IT services as well as the software space. And Apple, which is more so on the, one could argue whether it's a tech company or a consumer company. And my job on a day-to-day basis is to look at the financial results of these companies, the supply demand, the margin pressure, the supply chain pressure. What is management thinking about is management doing the right thing by buying back stock or not? So it's a lot of that work that goes into my day job. I also help out our colleagues on Bloomberg TV and radio sometimes to answer questions that they have about these companies. So that's really what I do on a day-to-day basis. And I'm happy to take our conversations in whichever way you want. Needless to say, the tech space is undergoing some massive changes. It has been for over 15, 20 years. And every once in a while, something new comes around and that disrupts the old guard, even more. But I'm happy to deep dive into any of the areas, whether it's cloud, whether it's security, whether it's services, employment, like anything that you want to touch on. I'm happy to go there.
Great. Yeah. No, no, no. We definitely, we're Bloomberg users, and also, we love the independence aspect of what you do. And so let's dig into it. One being automation. So, from our perspective, we're currently at the intersection of more things, more computing, cheaper
Yeah,
computing, more data, better kind of consumer grade software that some of the names you covered.
yeah,
90% of data today is considered dark data. As more of that data is captured, stored, analyzed, along with kind of, again, easy to use software, we think that opens up the door for more automation, robotics in the
yeah,
physical world, digital automation, and what that does to things like innovation and productivity. I guess the question is being passed to you, which is, your perspective from the purview of where you sit. What's happening in automation along the lines of maybe some of the stuff I just talked about, and then we can get into maybe some of the players that you cover, just what you're seeing in the state of automation today.
yeah. I think almost every disruption that's out there over the past 20 years or 20 plus years has led to more automation or more use of software in some shape or form. You can go back as far as Y2K, when there's massive shortage of engineers. People didn't know what to do at that time, and they started looking at outsourcing companies as a way to get some of the work done. And almost everything after that, I would say, is I think the big movement in the last 20 years has been cloud. It has been a topic that I guess everybody grew up with. But frankly speaking, even after all of that stuff, majority of the IT footprint is still legacy and on-premise. People talk a lot about the Ubers of the world or Pinterest, the companies that are born out of the cloud, but the bulk of the spending is still done by the old banks and the retailers and the healthcare companies, and they are primarily using old products or products that were cobbled together in a customized way, and that actually does not mesh very well for the concept of automation. Um, you can drive it, you can do, people are enhancing productivity. Well, one of the things I would say is there has been a very strong relationship in the tech world between, and I'm sure it's the same thing in other spaces as well, between revenue growth and headcount growth. So let's say barring, some industrial companies that have done a lot of good work with automation, I would encourage all of you to go look at an Amazon's warehouse and see how much automation is playing over there. So you don't really need to have that many people to be that productive. You can say the same thing about data centers. The newer data centers are fairly efficient that you need only a handful of people running it. But if you were to do a little bit of correlation between revenue growth and headcount growth for most of even the software companies, you would be very surprised how linear that relationship is. So if you look at somebody like a Microsoft over the last 5 years, their revenue has doubled in the last 5 years, and their headcount has almost doubled. So the relationship is somewhere around 1% to 0.8. So if Microsoft needs to grow, let's say 10% next year, it needs to figure out a way to grow headcount 8%. That's really not very efficient, frankly. Now, you don't see that in the case of Apple, where they have, again, if their revenue has gone up by 10% over whatever time period you look at, their headcount has only gone up half of that, so 5%. So you see some, you could say productivity benefits there. But in their case, it's not so much them, it's their vendors who are probably growing at a much faster pace because it's a product company. So I have been surprised that over a 15 to 20-year period, even the IT services companies, the ones that are, IBM, Accenture, and TCS and Infosys in India, for example, they have a very strong correlation between revenue growth rate and employee growth rate as well. But I think, everybody's trying to figure out how they can do more with a lot less people. There is a big shortage of tech labor even now. Over the last 3 months, I've been answering questions about tech layoffs, but frankly speaking, that's a very small portion of the expansion that happened over the last 3 to 5 years. And as I said, Microsoft headcount went to, I think, somewhere around 110 or so to, or 100, somewhere in the 100,000 range to 221,000 people. So after that, you could say 5-year boom, if they, decided to lay off 5% of that staff, which is 10,000 people, to me, it's not that big a deal in terms of the math around it. Now, it's unfortunate for those who lost their jobs, and I understand that. But I'm also fairly confident that those people will have very less, problems finding a job over the next few months, because there's still a massive shortage of technology professionals in the United States. So for me, automation right now is needs to happen on that end first. You got to figure out how we're going to make our employees more productive. Otherwise, this relationship will never break. And the big thing we talk about is, can AI help in this case? But one of the things I would say is, for me, the single biggest factor is, if you're still running very large legacy IT footprints, it's going to be very difficult for you to get some mileage out of that. So the number one factor I would say is migration to the cloud, both on the infrastructure side and the application side. That really frees up a lot of dollars of overhead that you're paying to maintain your own databases, to maintain your own servers, to make sure they're always, remains constant, or up and running. And I think if you do move to a cloud infrastructure, you gain a little bit of leverage from that. So that has happened. That has been happening for a while. But I think the cloud penetration rates are still so low. Before we, even move into the world of automation or AI, or enhancing more benefits out of it, the number one factor I would say is that the biggest secular trend for us is the slow shift to the cloud. We are already seeing that the cloud growth has slowed down quite a bit in the likes of Amazon and Microsoft, and we'll touch base upon that as well. But that is, I think, the first milestone before we move into this world of automation.
Yeah, no, that makes sense. Is having access to the data more freely, instead of the on-prem where everything is siloed. There
Yeah,
is the conversation of siloed clouds, right? In a sense where you have Salesforce over here plus
yeah.
the Microsoft ecosystem over there. Let's go a little bit deeper or a little bit more tangible to some of the companies and what they're specifically doing around automation today. You have the Power Automates at Microsoft. You have UiPath doing RPA, robotic process automation. Some of the private ones, whether we can talk about those like Automation Anywhere or something like that, Blue Prism. Um, you know, some tangible use cases that you're seeing, so we can take the buzzword of automation, put that into tangible use cases, so that we can see the line of sight of where we are today and potentially where this thing could go over the next, reasonable time horizon, 5 years or so.
Yeah, I think it is. A lot of these products that you mentioned, and many others, you still have to do a lot of work to come up with a good solution. But once you get that, obviously it reduces the number of FTEs that you have, whether it's back office, middle office, whether it's compliance, whether it is just writing code. I mean, there are we have seen a lot of um, increased work over there. The OpenAI and GitHub is using a lot of that stuff. Microsoft, where you can help people write code better and faster than before. So it cuts down the production of you launching a new product. Similarly, UiPath you mentioned, and Blue Prism and the others. Now, in that also case, you have to go out and look at a particular process. That process can then be optimized. Once it's optimized, then it goes away. But what I am going back and saying is, sometimes what happens is, if you move your infrastructure to the cloud, you can even bypass some of that stuff. Now, again, it doesn't happen. I think these companies have a good future ahead. Eventually, perhaps somebody would buy a bunch of these companies and include that and embed that in the software. But to me, the biggest use of automation and AI is a lot of the big software packages. We want to know how SAP's software gets smarter over time, how Oracle's ERP software gets smarter over time, how Workday's HR software gets smarter over time. And a lot of that has to be done with, if you have a common data model, if you can gather all that information on a single platform, it just makes it easier for you to run any algorithms on it. The big thing is, you mentioned about automation and data being hidden in different areas. That's partially the reason Snowflake's doing very well. People are using that to bring all that data in a cloud data warehouse, where you can then analyze that data, run analysis on it, and then pass on all the insights to somebody. So, either you can upgrade your entire system, or you come up with a new way of accumulating that data. But at the end of the day, if you don't have lots of data on a particular customer or a particular client or even your employee, you really can't build a lot of automation around it. So I see a lot of work going into the infrastructure side over there. And then in the end, you have vendors you mentioned that are installing their own software that can cut headcount also. That's also gaining momentum.
Yeah, it makes sense. It's starting from the infrastructure and working your way up. Yeah, no, I think that's a good overview of automation in general. We'll skip to the next one now, which is a lot of this stuff all is intertwined, right? Which is digital work. Again, it comes back to consumer grade software. It comes back to latency for things like audio and visual communication. Having something like this, the emergence of work marketplaces, whether it's the Fibers or the Upworks or some of the other talent marketplaces that exist today. The cloud, like you mentioned before, and actually having some sort of digital
Hmm.
substrate that we can all work
Yeah.
on. I guess the question again goes back to you: the work shifting more digital. There's numbers around how many people are not going back to the office. at least every day. Um, just your perspective, what are you seeing, today versus, where you think this is headed trend wise over the next, 3, 5, 7 years?
Yeah, I think unified communications is a big deal. And, one thing one could argue is that any knowledge worker in the US, at least, who, potentially could get a Zoom connection probably has one by now. So the question is, what does that company sell more? And that's what we're going to figure out down the road, because investors pay for growth. And sometimes in these companies, when you were, you know, just grew so rapidly during the pandemic. How do you grow next? Do you grow in a peripheral market? And the real, answer for that is, in a software world, you have to figure out a way to sell ancillary products to your install base. Now, from that point of view, some of these companies, whether it's Slack, whether it's Microsoft Teams, whether it is Zoom, they have a very strong install base, and I don't think that goes anywhere. The question is, what all can they sell to that install base to improve their growth rate is really the big question. And from that point, I think Microsoft has done a good job of trying to compete with Slack, and now they probably are very close to the functionalities of that particular product. And because they had such a big install base of Office customers, they've been able to sell that into it and really improve their user count. In my view, this is the long-term view is that you're going to see a lot of the software packages across all verticals to have a lot more embedded communications, involved in it. A lot more AI coming into it and giving you recommendations that can help you save your time. I think we already seen that in, I think, Microsoft Viva, that you get in the morning and say these should be your top 5 priorities right now. That kind of work, you will see a lot of embedding that in the software packages going forward. And that's only going to get more, I think, smarter if a large portion of your infrastructure is on the cloud. Now, I think all of these companies will have a place in the next generation digital future as well. Um, but the question is, can they sell more products into that base? And I think that's what I'm looking for. Whether it's Zoom or whether it's Salesforce with Slack, is how do they go out and embed Slack into all of their different enterprise products? Because I'll give you a very interesting example. I saw one of United apps that I think uses Teams. It's an enterprise app. It's not a commercial. It's not a consumer app, but
Hmm.
it's done um, within the community of the pilots and other people within that logistics that are trying to figure out how to do scheduling. They're using Teams within that, so it's embedded in it. It's not using Teams as is. It's just part and parcel of a bigger scheduling app that United has. So that's something I read. Now I haven't played with it because I obviously don't work for United, but you
Right.
can see a lot of the enterprise app that companies have internally will have some of these embedded features inside it.
Yeah, no, that makes sense. Digital work obviously is fast forward dramatically, obviously, over the last 3 years. So we are seeing some of the tools and where the emphasis is. Again, when Microsoft clearly shows that, this is where the world is headed by, completely revamping Teams and adding many of the different functionality that they've added there, it does speak to the notion that, the future of work communication collaboration is platform based, but it's also a large emphasis. It's also a risk to them, with the email client that they've always had in Outlook.
Yeah,
So, part of this was defensive, but I think it's turned very offensive over the last year or so,
yeah,
which is pretty interesting. Let's continue on. And I think future of computing, which is another, overarching innovation block
yeah,
here at Avery that I think is worth mentioning. And it's very vague, but it's vague on purpose because there's a lot of different types of, ways to go about, what the future of computing will be, whether it's, you focus on the hardware or software of it. We continue to think again, computing is going farther, it's going wider. We talked about on-prem, which is most what companies run on today, but the public cloud, the private cloud, the hybrid cloud, the multi-cloud, all the different buzzwords I know.
yeah,
Edge computing, where it's the devices, different form factors. 2022 was the year of metaverse and that concept or that dialogue, but it really is around another computing vessel that we would be using. And again, it drives more computing, drives
yeah.
more storage consumption, more access to more data. Talk about computing, all the kind of different variations I just explained, and anything you can share in terms of where future of computing is headed.
Yeah, I'm more biased towards that. Says for me, the basic computing services are like utility or electricity. You really, unless it's absolutely needed for any reason, there's no reason for you to do it internally. Companies like Amazon and Microsoft and Google are doing it at a scale, doing it at a cost, doing it at a security, and the homogeneous nature of it better than anybody can do it in house. So for me, that is the de facto place where everybody will go. Now we have already seen. Now you can go out and look at results from Amazon for the last 3 quarters. Same thing for Microsoft. A massive slowdown in consumption. Um, that's bad for these vendors in the short term, but it's a very good thing for them in the long run because it's teaching companies that you can take your entire fixed cost IT infrastructure, which is a large portion of your total tech budget, and make it more variable in nature. So if you don't want to use it any quarter to that extent that you're using now, you can turn it back down and save a lot. That was never an option for any large company before. Now, given, as I said, the workloads are very few in the public cloud compared to the on-premise footprint. So I think this big disruption right now that we are having because of economic weakness will drive more workloads to migrate to the cloud. Now, whether that takes a year, 2 years, 3 years, it doesn't matter. But I think the world is still going to be a very different public cloud heavy place. Now, in some cases, people are bringing workloads back because they didn't know how much would it cost them to just migrate one workload and try to run off it. And that's where the companies need to have a lesson that even though you can migrate a workload, if you're not re-engineering it and making it more cloud native, then you are really sometimes wasting your time if you're paying for the usage of that data. You might as well put it in your own data center. So we're going to see a lot of push and put over time, but I feel that just the nature of the capex that is being spent by these three hyperscale cloud providers far supersedes any company, or in fact, all the other companies, I would say after some time, it would be bigger than that, which means it would be better in terms of scale, speed, and security. And I think that's going to be a realization for companies as they go forward that why am I doing it? Now, there will be certain workloads that will not move to the cloud, and that could be has to do with a business decision. A CEO or a CFO or an executive would say, you know what, this is my bread and butter, and I cannot even risk anybody else having it. If I have to pay more money for it, let that be. And that is still going to be the case. So that's your, but that on-premise workload would also be designed in a different way than it is now. It will be distributive. It will, punish those departments that are not utilizing it properly. I can also see one day that these companies basically give their hardware free to a lot of companies and say, listen, you want to do it your way, do it. You want to manage it, you want to run it, take care of this. I'm giving you free hardware with software. I just want to get billed for the usage of it. In this case, they maintain the full control. They're going to recommend that, listen, not recommend, they're going to basically say, okay, we have a new patch out that you have to update it, that keeps it very secure. But I haven't seen that as of now because the public market is so big enough at this point. But I can see that, visually down the road, how that infrastructure could be part of it. So that's really as far as the edge computing is concerned, I think that's also 5G is enabling that people can install more IoT products on the edge. That's going to drive more compute resources, more, the use of, you could say, chips and semiconductors down the road. So that's really the computing landscape I see. I honestly don't. And again, one of the things I talk about a lot, both on radio and TV, is if you see what happened in the last 12 months, energy costs have skyrocketed in Europe and across the world. What that did was added a lot of extra cost for these cloud data center companies. Microsoft, in their previous quarter, basically said they're going to have an extra $800 million in expenses because of high energy costs. This quarter, I think they brought that number down to somewhere around 500 million. So think about it that you're a company and suddenly out of the blue, out of no fault of your own, your cost of running a data center is spiking up. Yeah, again, that could be 10, 50, 20, whatever percentage is going up. But then you start thinking, this is not the core of what I do. Why not I offload this work to either a hyperscale cloud provider or a co-location facility and let them deal with the headache, and I will just not worry about any of those things. And the biggest thing, more than just the cost itself, it's the shortage of labor because you need a highly skilled labor to run this thing. Why do I have to bother with this thing? Let that be Amazon's problem. And that's where Amazon is deploying a lot more automation too to make sure they don't really need to hire as much. And as they get bigger, scale helps them both with margins as well as trying to be more automated.
Yeah, no, that was a really well articulated, purview of future of computing. Yeah, I mean, just to chime in a little bit, yeah, you are seeing kind of what you said with, HPE's Green Lake option, which is, really shifting the mindset, actually the capex budget going from capex to opex, you're seeing some of that, which is pretty interesting as, the old guard tries to, defend their turf on the computing side. I think right there, I'll summarize going from the bottom up, which was, the last thing we just talked about, which really facilitates and powers everything else we talked about, the future of computing where, net, while some people may be repatriating some of their cloud spend to back on prem, the net number is definitely moving to the cloud. Why? Because flexibility in their financial models. As a CFO, they would appreciate that, but also flexibility in how you can access and use some of the information you're gathering over that time, where the Snowflakes and Databricks and some of the others are benefiting from this, or their customers
Yeah.
are. Then you go to digital work, where you talked about, obviously the Microsoft is intertwined in all this stuff, but really around, digital work and unified communications, not only being a better way because of all the compute resources we have, but the data collected that is happening there, which will then power the next phase, which is around automation, which is all around productivity. You're not automating for anything else other than trying to be productive and or trying to reduce errors and mistakes of something that is hyper manual or hyper important. With that, I don't know if you have anything to share around this whole concept of, future of computing, digital work, automation, any takeaways that you wanted to land. If not, just where can they find more information about you outside of, Bloomberg TV and some other things that you're always on?
Yeah, I mean, I'm on the terminal. You can email me anytime. I'm happy to chat about it. But from my side, people talk about AI a lot, automation a lot, but the foundation is, unless you have a very agile and a fast infrastructure, you really can't do much. Second, you really need to have a very comprehensive data model, because without that, you can't run any insights. Um, you need the system or the algorithms to be able to look at your old history, your customer data, your transactional data for several years to even give you any insights. For that, that's why cloud data warehouses or common data platforms or what customer data, whatever the acronym is, you need some way to aggregate that information, and then on top of that, you overlay some of that stuff. So there's a bit of a customization involved in it, which is why it takes sometimes a fair amount of work to do this. IBM's been pushing Watson for many years, but we have still see the dollar amount is not very large for them, and that's because it's not an easy. The concept is very easy to say, but implementation of that is very hard,
Right.
especially when a large portion of your data resides in multiple systems. I think the key in our view is going to be, um, you know, how do companies uh, face the productivity issue and the shortage of labor issue at the same time? Because you know at one point you'll have a very tough time finding any labor, let alone skilled labor. So I think that is why there's a lot more push on new chatbots and other things that can actually help make you far more productive. So that's really my viewpoint is that I don't think the current pause in IT spending is going to delay. I mean, it's delaying stuff, but it's not going to do a destruction to the path that we have embarked on, which is making each company a lot more digital than it was before. Because at the end of the day, if you cannot provide very high level of customer service to your clients, unless you're a monopoly, which I don't think there are that many out there, you're going to have a very hard time retention of customers, and for that, you will lose market share. I mean, look at the banking industry. It
Right.
is There's nothing so special about them other than customer service. So they are spending so much more to understand you as a customer better and give you financial products before you even want them. And I think that shift is not going to change anytime. It may take a pause in 2023, but I think if it comes back as soon as the Fed decides to pivot on the interest rate side, I think the IT spending comes back. And I think the year, whichever that is, next year or the middle of next year or whenever that happens, the rebound is going to be very sharp.
Got it. Anurag, appreciate you coming on and spending some time with us today.
Thank you for having me, Sean. It was fun.
All right, Ethan Chernovsky, ambulance in the background. Welcome again. We're lucky to have you back to back Avery Idea Days. This is the day where we bring some data, some expertise to many of the major trends that we're looking at, we're following, we're investing behind. But first, give us an update at Placer AI. Last time I think we spoke, it was mid last year. I think you raised a significant amount of capital as a company. you surpassed the unicorn status. What's the update? The elevator pitch of Placer AI, what you're up to for those that don't regularly listen to our conversations.
Yeah, absolutely. So Placer AI is a location data company. People vote with their feet. We're showing you how they vote across the United States every single day. Last year when we spoke, we raised that round. We hit that kind of unicorn status, which is really exciting. And then the last year has all about been validating that kind of status and kind of continuing to build on it. And so we doubled again in terms of headcount, in terms of revenue growth, in terms of our kind of logos was actually continuing to grow. And for us, it's just about embracing the grind and continuing to execute every day.
Nice. Cool. Yeah. It goes to show, last year was considered, right, a bad year for, valuations markets and such. And, if you're doing something different, if you're creating something that is, meaningful, adds value, creates value, I think, again, at the end of the day, what happens is, value creation is shown through whether it's the investment in the company or just, the product itself and the customers moving to you. So appreciate that. For this discussion, I really want to focus on some of the major trends that really excite us over the next coming years. We often say things like, investing where the world is headed. That's kind of our catchphrase. And, as it relates to, location data, foot traffic, they really create opinions, or they highlight opinions about how the evolution of commerce, let's say, is taking place or taking fold. People are buying online, they're buying offline, they want personalization. Companies have more data than ever, so they can create kind of these personalized promotions, attract people, create different types of habits. Consumers want experiences, both when they're dealing with a brand, digitally, or even just visiting a mall. The experience of just walking in and having things to do. So let's start with retail. What is the state of retail? We can start with that and maybe mix in mall behavior, because I think that's probably a pretty good proxy of what's going on in retail.
Yeah, I mean, it's a really interesting point. And I think, to kind of tap into what you're saying about kind of digital, omni-channel, harmonized retail, there's something really important about the shifts that have been taking place in the retail environment and the underlying recognition that they're predicated on, which is these are different channels. They need to be viewed as multiple channels under a single umbrella to reach the customer and to provide the best experience. And to do that effectively, you have to ask, what is each channel best for? So for example, we look at online channels. They're amazing for convenience. They're amazing for being with you everywhere. They're amazing for push notifications. I can reach you when I want to reach you, not just passively be there when you want to talk to me. And those are incredible values, right, that happen in the online environment. And digital channels and digital strategies need to embrace those strengths. But at the flip side, I think especially coming off of, again, let go back 4 years, the predominant narrative in retail was the retail apocalypse, which essentially said it's only going to be digital, stores are gone. And that's proven to be utterly ridiculous. And the reason is stores and physical environments bring something that the digital channels can't bring. They bring discovery. If you look at visit durations, they are dramatically longer offline than they are online. And it makes sense. There's touch and feel, there's experience within the store. There are all these elements that the physical location can provide that a digital replacement can't. And so the shift in focus is about how do we leverage these elements together? So for example, let's take something really simple. We go to get a new shirt. And we want to get a shirt, we want it to fit well, and we want it to feel great. And so we go into that store and we try on that shirt, and there's a great salesperson who's helping us, and there's a fitting room, and we make sure the fit's awesome and it feels great. And they try to push us towards pants because we're in discovery mode, and maybe we'll do that. And they offer us 10% off. So we'll do the loyalty program. And we agree. And then all of a sudden we start getting updates from them. Hey, it's almost your birthday. Do you want to get yourself something special? We're going to give you 50% off. And then there's elements where they want to get us back in physical locations so they can engage with us in other ways. But it's recognizing that each of these channels has benefits. And when they're used holistically and when they're used together, you can maximize the impact. And I think that's the fundamental premise that even when we talked in the past about omnichannel, it was essentially physical retail's a thing and omnichannel means digital enhancements. But it's not the case. It's about recognizing that digital is there, and digital is critical and important, and brick and mortar is there, and brick and mortar is critical and important. And how do we leverage the benefits of both together? It's also what's going to drive a lot of the innovation. Those are the areas you want to look at. Once you hear strategies that really double down on the nexus between those two, those are the things that we should be getting excited about.
Yeah, no, that is, if you're running a company, that sounds like, exactly what your strategy should be aligned to is a single point of sale, at least mentally. And then how do you get the customer to the bottom of the funnel by any means possible? I think, what's interesting, as we listen to, some of the companies, speaking over the last several months is really around the fact that, you know, some of the stronger companies that we're seeing out there are the ones that have, the biggest loyalty bases, the ones that have the stronger digital presence. When things get tough, at the end of the day, maybe foot traffic may slow down a little bit in the malls because maybe the first thing in your mind is let's not go to the mall and spend the extra dollar. But if you're getting push notifications and kind of these consistent nudges, there's that potential of converting. So it becomes a low cost of acquisition for those players that has successfully built out their digital presence to attract them to the physical world, and then increase the durations while they're in there by uniting and creating in theory a masterful experience. Talk about the mall. What are you seeing with foot traffic, the data that you guys see in terms of the mall, the good ones, the bad ones? What are you seeing in terms of as we are in 2023 and beyond, who's not necessarily who's winning, but just trends in general?
So I think the biggest trend is when you look at the top tier of malls, outlet malls, by the way, it's the same. Open air lifestyle center is the same. The strong are getting stronger. We're seeing significant growth compared to a year prior, but a year prior was impacted by Omicron, so it's to be expected. But even when we look pre-pandemic, we're seeing visit gaps start to shrink when we look at it on a weekly basis. We're seeing the strength return. And there's a few important things to remember here. One, top tier malls especially, but many others, have been shifting focus and being less focused on just apparel and beauty, which is kind of the classic sense we have of the mall experience, especially from a retail apparel perspective, and much more focused on other segments. So things like medtail, like health tenants, the idea of having more experiential, more restaurants, more things that are not just about, hey, come in, buy a product and leave. And so that has a big impact. And the other element that has a big impact is they know who their audience is. And so one of the big elements we've looked at is the difference between malls that are oriented towards luxury and those that aren't. And those that are oriented towards luxury, even though they can see sometimes visit declines, they're still driving a lot of success because they know how to bring the right people to the right experience. And one of the big things that I don't think we talk about enough, but it's so obvious that it bears kind of calling out because sometimes it gets underplayed. I don't need everyone to come to my store. I need the right people to come to my store. I need those people to come with intent. And then I need to be able to give them an experience that enables them or increases the likelihood that they convert. And I think when you look at top tier malls, they do that incredibly well. And this combination of creating fuller experiences, understanding who their audience is so they can provide the right retail mix for that audience, and then the right kind of elements alongside of it so that when you go, you're spending more time, you're doing more things, and you're becoming a more valuable visit each time you go.
Yeah, that makes sense. In adjacent to the mall, or like what's becoming more of a trend, and we've talked about it in past, conversations, is fitness going into malls. Lifetime Fitness, Planet Fitness, and some others, are really making viable stakes inside of mall square footage. It makes a lot of sense. At a higher level for us, one of the big themes is really around health and wellness and just personal care. And that is ongoing. Again, you're seeing it in the digital world, whether it's the Headspace apps and some of the kind of mental health type of products that are out there, which you can do at home and facilitate there. But also, you have fitness categories and all types of categories are emerging, and the experiences there tend to be pretty engaging. Pilates and some of the other stuff that people go to. And what are you seeing in the fitness category, both, I mean, on mall, off mall, but just in general, trends coming post-COVID. And, I don't know if you have any leaders, winners that, come to mind that, you've seen in the data that suggests, here's a brand that's showing some strength, for lack of a better phrase.
No, completely. So I think one, the wider category, and especially when we think about the post-pandemic environment, we talked about this with retail and like kind of the last primary narrative being the retail apocalypse. Fitness was facing something very similar. If we think where we were June to July 2020, we were convinced that connected fitness is the future and in location fitness is going to fade off. And that was exacerbated by certain chains saying they needed to close locations and some struggles being faced. But at the same time, we were seeing folks like Planet Fitness expand their locations, folks like Blink Fitness expanding. And now we're seeing the benefit of that because they always understood that they weren't going to be forgotten, that this was a temporary process and that recovery was going to take place. And what they did is position themselves to take advantage of the recovery, to take advantage of the closures from competitors. And so when you see those value-oriented chains, they're doing incredibly well. And a big part of it is, like you mentioned, it's a focus on health and wellness. It's a focus on a recognition that connected health and connected fitness is great, but it's not everything. And there's this a la carte mentality that says, I want my Peloton in my house, but I also want a gym, and I'm also going to do SoulCycle a couple of days a week. And so if I want all those things, these value-oriented chains have a huge value because it enables us to put them within this wider mix at a good cost. On top of that, think of where they are. The Planet Fitnesses are everywhere. They're in the suburbs, they're in cities, which meant that even though we saw shifting migration patterns, they were poised to benefit no matter where the recoveries came. Other more focused chains struggled a bit more to recover just because the people weren't coming back to those areas. And I think anyone who has a big reach, has a clear value proposition, and understands their audience and that was using that to drive their expansion strategies, those are the chains that are benefiting the most right now.
Yeah. Yeah. We've had the idea of, the Airbnb kind of mentality. And you saw that obviously accelerated by COVID, where, I think some of the data out there is suggesting that, people are leaving on Fridays and coming back, Sunday night or coming back Mondays. And ultimately what that means is, some people are working still maybe on that Friday or that Monday, but they're working somewhere else. And having, as fitness and, health becomes more important, you do want to have something everywhere where you possibly could be. That kind of goes back to the next theme, which is really around, digital work. And again, I think what's interesting is, a lot of the stuff we're talking about is really the convergence of, what we used to do and, maybe the adjacent of better ways to do things. But at the same time, it's not one or the other. It's kind of a hybrid of each, right? Whether it's fitness and Peloton Plus, Planet, or it's retail, whether you're, you're on the app buying from Amazon 100% of the, or 50% of the time, but also going to the malls the other 50% of the time. The office, I think, is the same thing, or just work in general, where, many of the stats out there are suggesting, 30% of companies are fully back in the office 100% of the time. And the other 70% is either, fully remote or some form of hybrid. What are you seeing? I think, this is probably some of the best data that you guys can see, which is, foot traffic going back to office centers. And what are you guys seeing there? What do you guys think about, if you had to make a viewpoint here of where we eventually go? I think I probably have an idea, but go for it.
So I think overall, we're seeing a pretty clear trend. The question becomes, does it continue? And then if not, or if so, what are the implications for the kind of wider market? So let's start with the trend. When we look at we have indexes in 11 cities that look at anywhere between 40 to 70 office buildings. And we measure those compared to where they were pre-pandemic to get a sense of the recovery. And what we're seeing almost across the board is visits are down, and they're down significantly. In some cities, much less. Like New York's recovered much more than San Francisco. But there's a really interesting gap between unique visitors and visits. So unique visitors tells us how many people are going back. Visits tells us how many times they're going there. So that gap for us is explained in two ways. One, hybrid is real, and we'll kind of go into that more in a second. But also, the implications of hybrid are real. So if I'm only going into the office 3 days a week, and I have a satellite office in San Francisco, and I'm going to the office in New York, let's say, how often is my San Francisco colleague flying to New York? Pre-pandemic, it might have been once a month. Now it's much less because we're comfortable with Zoom and we don't need to the face-to-face as often. So I think those two components are having a big impact. But then the other thing we looked at was which days of the week are people coming back? Let's look at the proportion of visits per day of week. And the 2 days, as you mentioned, that are taking the biggest hit are Mondays and Fridays. The days that are taking the biggest boost are Tuesday, Wednesday, Thursday. And it's super interesting because one, it reinforces this hybrid concept that I'm just coming less, and I'm coming when I want to, and I'm building my schedule around it. But it also tells us about a different type of individual who is the classic office worker. So if in the past, we think of the consumer or the individual as having 2 modes, work week, weekend. So Monday through Friday, I'm grinding it out, I'm commuting, I'm coming home, I'm trying to squeeze in, the grocery visit at night. Otherwise it's happening on Saturday. And and my Sunday is my day to go to Home Depot or Bed Bath & Beyond or whatever it may be.
Oof.
That's changing because we now have 3 modes. We have weekend, work from home, and work from the office. And that's super important for retailers to understand and for others to understand in terms of the mindset. Because if I have that period in between, it's like you said, I can go do that long weekend and I work Monday morning, or I end early, a little bit early on Friday, and then we go to the place we want to go. But also, it's Monday morning and I start work at 9 o'clock. At 8 a.m., I decide to go to the grocery store. And all of a sudden, that grocery visit that took up an hour and a half of my time on a Saturday and my day off, That's gone. That hour and a half is back. What happens now? There's an opportunity in these shifts. And it's so critical to understand what the data is saying about how the consumer is being impacted as broadly as possible, where they're spending their time, how often they're going back to the office, what are their shifting patterns, but then also trying to ask, if those patterns have in fact shifted, how does my message change? How does the way I communicate with them change? How does the timing I communicate with them change? And how do I incentivize behaviors that are good for me? So if I find that a consumer that comes shopping in my grocery store before 4 p.m., let's say, has a larger basket size, and the one who's kind of coming at rush hour at the grocery store in the evenings has a lower basket size, I want to incentivize that early visit. And so I think this is the way that retailers are going to start thinking, and it's going to give a lot of opportunity to those who can move quickly.
Sure. No, that's I like the way you frame that. It you know, next area which kind of, makes you think around, why potentially, and I'll talk about the brands in a second, why some of them are potentially succeeding or growing faster than the others. We continue to think, brands obviously are brands, they nurture them, they create them. But at the same time, if you can attach digital and loyalty to a brand where it's in your pocket all the time, convenience and value as well, at the same time, it's powerful. And I think this shows up fairly well in the coffee segment. Starbucks, Dunkin', and Dutch Bros. Makes you think of why potentially Dutch Bros, their same store sales continue to look pretty strong. You just did your three part week, which, there's more people out in the suburbs, of which, obviously there's Starbucks and Dunkin's everywhere, but, the ease of use of just the drive up strategy, which is essentially all Dutch Bros' concept versus maybe some of the others. But in general, they all have three brands. Dutch Bros launched their loyalty program here in the last year and a half. Starbucks has had it for a while, and that's been part of their success, and Dunkin' as well. What are you seeing, taking the concept of, applying digital and brand to drive traffic? What are you seeing in the coffee space, which is, in some cases it's a must have, right? For some individuals, to start your day, to kick your day off. But in other cases, it's a nice to have in terms of going out to go get it. So, but what are you seeing? I think it says a little bit about the economy as well. So in general, brand, digital, coffee.
Yeah. So, I view coffee as kind of an affordable luxury. We talked about this when we did an analysis of the sector. So it's something that even in a more difficult time, it's the way I can treat myself.
Sure.
I think alongside that, when we think about the offline online interaction, there's a few things that are super interesting. So one is the store as a fulfillment center. So think about Starbucks, order you go. Think about a location in the middle of Manhattan. You want to get in and get out. You're on your way to work. It's cold. It's the winter. I ordered it. It's there waiting for me. I'm gone. That is the perfect utilization of that location. But there's a different location that's focused on experience. And if I'm focused on that location, let's say in the suburbs, I have a large format location and people want to sit there. And because they're working from home Monday and Friday, they want to get out of their house for a little bit. So they spend 2 hours in their local Starbucks. Right? That's a value that can be provided. And then the last bit is that recognizing the opportunities that work throughout. So I think Starbucks is the master of this with things like Red Cup Day, or, we looked at this ages ago, but like tie-dye frappuccinos. They're gimmicks and entities that
Sure.
they use to drive strength in weaker periods and to drive their loyalty program. Because, hey, you want this free cup? Sign up for our loyalty program. That's the commitment. Amazing. Because they're using a short-term benefit to give a long-term appeal. And I think that's how smart brands operate. They think about all of the values that their locations give them. They think about being multi-channel, and they think about providing things that make the customer excited, that also give the brands long-term benefits.
Got it. And I guess just general trends. What are you seeing? The health of these three companies. I know you guys did a study about it, so some of it is fresh off the press for you guys. So what are you seeing in terms of the data you guys see at Placer AI?
Very strong. I think, especially compared to the rest of the dining sector, I think this affordable luxury concept is super significant. Dutch Bros continues to expand, and they're keeping their visits per venue numbers really high. That's a great sign. Dunkin' obviously very well positioned from a value perspective. I think all of them are really well positioned, and a big part of it is they can kind of succeed no matter the environment. And that so long as they continue to expand in a smart way, they continue to think about their locations in an intelligent way, and you see discipline in terms of the deployment of those locations, you'll see a lot of success.
Perfect. To wrap it up, again, we talked about the state of retail, the malls, the omnichannel approach there, the experiences. fitness in general, again, it goes back to the hybrid approach. And again, if you go down the 5 topics I think we spoke about today, they all have this same general concept, which is customer experience, value proposition. And again, that could be at the high end or even the low end. And it's really around, wrapping digital and loyalty in some form or fashion, driving traffic to any of these physical locations. But at the end of the day, again, a lot of these things have, real tailwinds behind them. We think we're in the early days of personalization. ChatGPT just came out, and then, that's AI. There's a lot of obviously steam around AI and the concept of it. It's been around for a little bit. People have been trying to use it within their own products. We just don't call it something. And that's really it. I think, all these trends exist. They continue to progress. But with that, Ethan, I'll let you just for 1 second. I know we started off with it, but finding more about Placer AI. Obviously, you can reach out to him on Twitter and LinkedIn and stuff like that. But anywhere else, just to give you a second to share.
Yeah, if anyone's interested, Placer.ai, there's a free version of our premium platform. Check it out, play with data, embrace data, and it'll be great.
Cool. Ethan, appreciate it again. Always a good conversation. And we'll speak soon. And thanks for coming on.
Thanks, Sean. Great to be here.
All right. We are here with Seema Shah. Welcome to Avory Idea Day. We're lucky to have you on here. We are users of Sensor Tower. The data on there is definitely second to none. You get to play with it every day, which is pretty cool. You're the senior director of research there at Sensor Tower. Most people watching have probably read your research or seen you, talk about your research. But before we get into kind of today's agenda, just give us some background on yourself and also, what you're doing at Sensor Tower.
Sure. So I joined Sensor Tower a couple of months ago, or about a quarter ago. My background is actually in equity research on the buy side, and then I've also done some credit research, but I've been moving over to utilizing data to do research and to get sort of a different angle to what a typical long-short equity investor might use in their work process. So since I've been here, what I've been trying to do is really, we take a look at our data. As you said, we have a wide swath of data and metrics, including our partner company called Pathmatics that has marketing and digital media data. And we put that together to see what we can tell about how a company might perform. And since our data comes out literally a couple of days after the quarter ends, we're able to look at how things have been the prior quarter way in advance of when a company reports earnings.
Yeah, no, I appreciate that. So, turning to today, much of the world continues to go digital, and that digital kind of evolution has gone mobile, which benefits everything you're doing. If you touch the consumer and you don't have kind of a well-designed mobile app, then I think you're being left behind. Some of the major trends here at Avory is really around the digitization of everything. If it can, it will, be digitized, add value and such. Different areas of top of mind for us as we break out our what we call innovation blocks, which is part of the portfolio that we invest in, are things like education tools and what's happening within education. It's also, things around new forms of commerce. When you think of, things like QR codes and peer-to-peer, that also, transpires or moves into digital wallets and finance, VR, AR, and how, the potential of computing. Do we have a viable third computing platform here on the horizon? Having you today, we get to dig into some of those. And I know, you're always well prepared. So you have plenty of data to your side where, you can leverage. But, let's start with education disruption. You did put out a really good piece. We're big fans of, Duolingo and what they're doing there and how they're crafting, taking out a curriculum or a segment of education that's not too disruptive to the status quo. But what's your thoughts on education disruption? Some of the players that you track in the ecosystem.
Yeah, I think one of the biggest trends we saw was during the pandemic when everything shut down. It was a huge moment, I think, for online education. But what we've seen as things have reopened is that different forms of online education continue to do well and to be important. So it's moved away, I think, in many cases from a traditional classroom experience in terms of digital education, but it's gone to include things like for employers to improve the skill set of their workers, different types of classes. There's language classes, different business skill sets. So there's a lot of opportunity outside of traditional school, which is likely why there continue to be growth going forward, despite the fact that schools and universities are reopened. And I think in general, and we'll talk about this later too, the world is just hybrid in general. So before, when you look at retailers, it's all about omni-channel. So I think that concept of omni-channel has actually spread to these other sectors where it is about, do you have a physical presence, an online presence? Do you have a mobile presence? And in this case, these apps having that mobile presence and then having live instructors and different things to sort of mimic a physical environment, I think is what has been going really well for them. Duolingo, you mentioned that one is actually one of our faster growing apps in the set that we looked at. That and its a second app called Learn to Read. Those are definitely growing at the fastest pace compared to pretty much all the other peers that we looked at. In terms of downloads and monthly active users, one of the things that Duolingo specifically mentioned, they've yet to report their Q4 earnings, but they have been trying to drive in-app purchases to be a higher percentage of their total revenue by adding different features and content. So as of Q3, it was 5% versus 3% the prior year. And if they're able to continue to do that, they're better able to monetize the users that are already on their platform. And then by adding these different types of apps, like for math or reading with different demographics, just a way for them to get a broader audience. But as a whole, they are significantly larger than their peers in terms of absolute monthly active users and downloads. The company that did report recently was Chegg, and what they said was that they're on an upswing in the sense that their fiscal year for their products is typically better in September when school starts. It aligns when school is, and so they've seen an improvement in their monthly active users. But again, all of them are coming off and comparing from very high numbers in 2020, seeing the softness last year. So I think it's moving into being a new normalized number, but they are on an upswing in terms of seeing how they are performing. And you'll see in that note, at least for Duolingo, Sensor Tower's estimates quarter over quarter for revenue are very much in line with what the company has put out of 10%. So that's what we're kind of looking for going forward.
Yeah, I think just at a high level, it sounds like the trend within education disruption, I guess, for lack of a better phrase, is continuing. It's normalizing, but the term comp to comp, which was the big boost from COVID. Then you had some form of normalization, but still growing, specifically for someone like Duolingo. What's fascinating there too, as well, is you go back to like 2000, right? The freemium model was frowned upon, or it was not then, but it was frowned upon for years after. And Duolingo has really, emphasized the freemium model, similar to like the Spotifys of the world and some others that exist. But they've been able to execute on that to some degree, right? With the paid subscribers. We were tracking some of your data recently because, again, we have interest there in Duolingo. Again, no recommendations from both of us, but it's essentially, and we'll have plenty of disclosures for that. But essentially, the last couple of weeks, I think they had their best week ever in terms of app downloads, and it was post, the new year, which education, language learning, some of these things are becoming kind of those year-end goals or start of the year goals.
Like a resolution, right? And
like a
think
resolution.
Because you can do it at home. You don't have to go to a class. You do it at your own pace. I think it incentivizes more people to at least try it out. And I think what you highlighted about the freemium model is once I try it, if I like that platform and the interface, and why wouldn't I, if I want to further that education, I will become a subscriber, right? But I think in many cases, you just have to subscribe right away with these kinds of products, which I would say the vast majority of the population is not so familiar with. It's harder to get that subscriber because they don't want to make the commitment until they really see what they're going to get. So
definitely.
That's probably why that model works for Spotify and Duolingo and whatnot.
For sure. Moving to more resolutions is really around fitness.
Yes.
The connected fitness space was all the rage in 2020. For rightly so. I mean, Peloton is obviously the name that everyone thinks about when you think of, March of 2020. Great product, a lot of good things to say about them. However, obviously, it's not a product necessarily that you essentially buy every year. It's something where like the replacement cycle no one really knows, I guess, at this point, but it could be 3, 5, 7 years, kind of like a car. And what are you seeing in the fitness space? Fitness can go everywhere. It can go from health and wellness to, apps such as like Headspace, others that, and I've seen some of your research on some of these as well. But stepping back, the fitness or wellness space, which we think is a big category and one where more people are actually becoming more, or thinking about their health and wellness more often. So it's a growing space, but what are you seeing in the data?
Yeah, so you're right. It is a very broad space. And when you look into it, it's divided into things, like you said, like the meditation apps, beauty, physical. So for this particular case, since wanted to focus more on that connected fitness. I sort of stuck to more of the physical health. So looking at somebody, like Crunch, Orange Theory, LA Fitness, Peloton, obviously Planet Fitness, to get a sense on how they've performed. Now, as you said, 2020 was a perfect storm for someone like a Peloton, right? It is basically a pull forward of demand for their hardware. But then what they've seen over the years, obviously that's not a purchase you do every year. So then they were sort of struggling, I would say 2021 and 2022, right? As they didn't have that hardware sale and they're trying to get more subscribers, which they did see growth this past quarter that they just reported. And so we saw a lot of upside in the name. And on our data, they are seeing growth in downloads and they are seeing growth in MAUs most recently, though there was, again, weakness in prior years. But I think it still goes back. And if you listen to the CEO, it's not just getting that customer that has the bike. It's all about connecting with them. And I think it goes back to what Weight Watchers was always trying to do, have a community. By having a community, you get people to be stickier customers and you have more options to upsell them on different products. So I think that's where Peloton wants to go, I guess, over time, by getting more subscribers where you don't necessarily need to have the product. Then you have someone like a Planet Fitness, who's also, I think, the largest physical gym company in the United States. Many, that is, again, going back to the omni channel. You can do things on their app. You can become a member. You can also schedule. I think having that flexibility is, in many cases, what could give them an edge. And even some of these smaller ones, like say an Orange Theory, because people really want to, sometimes you want to go to the gym. Sometimes you just want to do it on your phone, or you want to make sure you can book that class. So the easier you make the process, I think the better that it is. And so Peloton is sort of like halfway there in the sense of getting the connected subscriber, and then physically they have the bike. But the community aspect of it, I think some of the physical gyms with the apps have. And I would say that, yes, 2020 was an anomaly, but health and wellness is going to continue to become very important. It is already. I mean, that's why you have so many digital devices checking your sleep and steps and everything like that. So I suspect this will just continue, and there'll just be more innovation to get somebody on your app and then to make them sticky. So rather than have an app to check your sleep and do this, I would imagine that over time, you're going to just see more and more of these consolidated, right? Like, come to our app and we'll keep track of everything for you, like your overall health and wellness.
Yeah, almost like your own personal dashboard of sorts where it's aggregated.
But they all relate, right? It doesn't matter if I train for a marathon, I sleep 2 hours a day, right? So ideally, we put, I don't. Ideally, we try to
That was
put
going
that.
to be my next question.
I would say that ideally, I think over time, it's a combination of that in order to get, that real true customer. Because right now, there's not that many switching costs for people to go from app to app unless there's an initiation fee. And if there's not, then you just have people kind of moving around like for promotions, right? And so that's something where I think you just really want to get them ingrained and have a very easy to use interface so that you can get all demographics, just not the tech savvy younger people.
Yeah, no, for sure. We definitely saw in your data the Planet Fitness, app download surge. And, while it was a negative short term for them during COVID, it was, big picture, it forced them to think about their app and how to check in. So now everyone that obviously buys or subscribes or whatever becomes a member of Planet Fitness is essentially forced to, because I think they got rid of the physical dongle that you have to check in. So you have to use your app, which is an interesting concept. Again, it now creates that, digital connection between the brand and the consumer, which ultimately what we all know is data,
behavior, right?
Yeah,
it's a way for them to track behavior, timing, and they can personalize things. If they see that I go in every day at 12, and so do you, maybe they add a class at that time in that location. So there's a lot of data that can be collected on their end when they have that kind of personalization over time as they collect this data. But yeah, pretty much all of the apps were up in terms of downloads, and Peloton is much lower than its peers given the peak that it was at, but it's definitely not as negative as it was in prior years.
Right.
It appears to be, improving.
Sure. That's what we saw. Obviously, like financials is one thing and app downloads is another for them. Yeah. But the, next thing is you could call it another, year-end goal or goal is really around, finance.
Yes.
The digital wallets around saving, spending, sending, investing has been a big trend. It makes a lot of sense, when you go to the store, when you're with your friends, when someone asks you for money or whatnot, it does make sense to have, a digital wallet of sorts, as opposed to some of the legacy stuff. I don't remember the last time I was in a bank, to be quite honest with you. Maybe it's like one time over the last couple of years, but obviously the incumbents are catching up as well and just making sure that they have technology enabled solutions. But let's talk about the digital finance space in general. Obviously some names that come to mind to us specifically are really around, Cash App,
Yes.
which really came on the scene really only like 5, 6 years ago and has really gone parabolic since. And then you have like the Venmos of the world, the PayPals of the world, and some others. There's the brokers, Robin Hoods and some others. Anything you can share and views on the space more broadly?
Yeah, well, I think the payment segment is actually integral to so many of the other parts of mobile that we discuss, right? If you do not have a seamless payment option, whether it's for your streaming app or your retail app, you usually have cart abandonment. People do not want to take the extra time, which is why I think having that relationship and having a strong payment app is so important, and why I think PayPal has been able to sort of take the lead, at least on desktop commerce, right, by being embedded in all the retailers. But as you talked about, the other payment apps, I think, are increasingly important as well, for retail, but also, as you said, from peer to peer, and they've continued to do very well. I believe Cash App has been growing the fastest in terms of downloads and MAUs, or one of the fastest. Affirm was actually the fastest, but I think that's a little bit of a different case because that's buy now, pay later. So I would kind of separate that from a peer-to-peer type of payment system. But overall, I would say that the payment apps, the MAUs have been growing positively. Downloads maybe were a little bit slower in the last couple of quarters. And I think that's partially because there was so much. You can only download the app once really to be counted. So if you think of what happened in 2020 and 2021 and the surge in e-commerce and I guess mobile commerce, I think that makes sense logically. I don't think it's necessarily a negative that downloads have slowed. It just, I think, again, there's a lot of pull forward in demand, but having the MAUs grow, I think it's very important. And I think you'll see continued growth in these apps because that's the way now you pay everybody. If I work with a contractor, they usually now take Venmo, and that's a good way for me to keep track of it. I don't have to write a check. I don't have to pay with my credit card. So there's a lot of benefits. I think you'll see that in like B2C more, and you'll keep seeing that in peer-to-peer or C2C for that matter. And I have been reading a lot about B2B, having more payment options for them. So it's, again, more seamless because that, I think, is still a lot more antiquated than this type of payment system. I think the other thing we talked about with buy now, pay later, that had a huge surge. I would be, even though Affirm from our data had strong MAU growth, we saw that they just reported that things have slowed. They're very tied to the strength of the consumer. And I don't know if you've seen our research on retail, right? But the consumer continues to be under pressure, right? They are getting into their savings and going on credit to make a lot of these purchases. And while delinquencies are still low for the buy now, pay laters, you think about the delta, if you start seeing them increase, that's just something to be concerned about, right? Because right now you can get a loan from a buy now, pay later without a credit check. But once you miss it, then the payments escalate. So I think that's just something to keep in mind as we go forward. But I definitely think for the other types of payments that aren't sort of loans, yeah, you're going to continue to see that growth. And people want to be able to do everything, on their phone, look at their stocks, make the payment. It's just easier and it's faster, right? It's convenient. There's just the easiest thing to do. You don't have to worry about someone paying you back. They literally can just do it. I mean, a guy borrowed money from me at a gas station because he didn't have cash and he Venmoed me right away.
Oh, wow.
So I'm just saying, like, it's useful for all kinds of things that you wouldn't have thought. So I would expect it to continue to grow and become more integrated in all these different applications, both on the web, but also on mobile, in particular on mobile, because that's where I think a lot of transactions break. But having Apple Pay and everything, it makes it easier. You're more apt to actually convert a customer if you have that functionality.
Agreed. Taking that even a step further, and what's interesting just in the conversation here is, the building of how all this kind of strings together. Is the next one is really around, we have the belief that, more and more commerce will happen in the confines of social.
Yeah.
And it's only a matter of time, and you're already seeing it, right? But it's stair steps here. And, payments is a big, the creator economy, right? Which is, whether it's Spotify's or YouTube's or anything else, allowing payments is the biggest mechanism there to connect, the creator to somebody that wants to either give them a tip like Patreon or essentially pay a subscription like a Substack. Let's talk about social in general at a high level. Social, what are you seeing there? I saw the data that you recently just published, and some of the engagement stuff specifically for Facebook and Instagram versus like a TikTok, just given its scale and size, was actually very striking in a positive way for the Facebooks and Instagrams.
Yeah, that was a little more surprising versus the way that Facebook and Instagram are, I guess, where they play out in maybe downloads and monthly active users, where you see a surge with TikTok, right? TikTok has really come out of nowhere, for lack of a better word, and really taken the social media environment by storm. And because of their success with these videos, right, you see the launch of these different type of short form videos on these other platforms, which I think has been helping them. But the bigger story beyond the users and the growth is advertising, right? And so there's the connection between how engaged your users are, how fast you're growing your downloads and your monthly active users sort of corroborates to advertising, right? And with our Pathmatics data, we're able to kind of see advertising data on these different social media platforms. And so you're seeing TikTok gain share from a number of the larger advertising players like the CPG players and retail. And then they are then pulling back from, like a Snapchat or some of these other, and Twitter obviously, right, pulling back from advertising over there. But it's sort of a circular thing, right? Because if you have the right users, you're going to get the right advertisers, especially because the advertisers themselves are now under pressure when the end consumer is not spending, right? So they're being much more strategic. Where am I going to get the actual customer I want to see my ad? And then again, I think the benefit that TikTok has, it tends to skew younger. So that's often the target demographic for a lot of advertising. So I think you'll continue to see, we'll be continuing to monitor advertising because that's really where the business side of the social apps are. And I think from a user and download perspective, we are seeing some of the other apps that had been growing plateau a little bit. But at the moment, TikTok continues to be the fastest grower. And then someone who's sort of an outlier like a Be Real, their downloads and active users seem to be waning relative to some of their peers. And I think part of it is because you take one picture per day, right? So you're not as engaged on the app per se as you are on the other social media apps. And so that's just something I think to take note of, right? It's private now. They don't have advertising.
Right.
But over time, if they'd like to have monetize their business in some way, they're probably going to have to add more features and functionalities to keep customers on longer so that it's something that advertisers would want to look at.
Right. Yeah, no, I was looking at your data and I'll pull it up here, which is really around, the engagement trends. So this is as of, I think you probably have it, but right there. But the Facebook saw 12% year over year growth and flat month over month. TikTok was flat, and Instagram was a plus 8% on the year over year and month over month. And so that was through January of 2023, correct? And do you have any thoughts of why, something like an Instagram possibly could be seeing the strongest trends, and even like Facebook 12% year over year versus a flat TikTok month over month? I don't know. It seems like pretty big news that's happening at the face of, how strong downloads are for TikTok. You would think, you're seeing both happen just given where it is in its life cycle.
Right. So one thing to note about Instagram, when we looked at our data of these social media players, it has the lowest churn. So think of it having the stickiest customer. I think I'm not sure if they spend more on Facebook or Instagram, but combined, that's where people are spending the most amount of time, right? Particularly on Instagram. Instagram has a lot of other purposes that some of these other apps are still working on, right? With the influencers and the retail, as you said, they're probably a little bit more well developed. So I think that in that sense, that's why you see Instagram being stickier and seeing more hours engaged than maybe something like a TikTok. And again, it probably goes to the demographic, right? The downloads continue to be there for the TikToks of the world, but then the content may not be as varied as it is in many cases on Instagram or Facebook, right?
Sure.
So I think that's that. And they've added some of the features that made TikTok attractive in the first place, right? Like the short form videos and things like that. So it is notable, and we'll continue to watch and see how things change and how people's behavior change. But again, like the biggest change has really been in the advertising and the way that whole environment has played out, right? So it's because advertising is slowed. That's why all this type of metrics and who's where and at what time and how long have become more important, because these are the dollars, these are the revenues that are driving the company.
Yeah, more precise measurement for them.
Right.
And being more careful about each dollar they put down. So let's, we have only a couple more minutes here, but let's, I'll combine two categories and see what we get. It's, AI, which is a huge, conversation these days, even though, part of me following, the industry for a while has, we've been talking about AI for a long time.
Yeah.
It's just, ChatGPT was one of the first to really, put it in the hands of the consumer where you can kind of, you can feel essentially, AI at work. As opposed to, you're scrolling down your Instagram. I mean, there's a lot of AI going in there. and personalization specifically for the advertisers. But
Yeah.
AI is one. What are you seeing there? AR, VR. I know those don't necessarily combine or join at the hip, but some of the players in AR, VR are also some of the bigger players in AI, specifically like a Meta or something. But in general, what are you seeing? Anything you have on those two areas?
So I have some data actually on MetaQuest on that app, and I think what's most notable, I'm trying to find it, it's that year over year trends for downloads and monthly active users has been decelerating, and I think that's just something to note because it's not really that old of a technology, but it's also I think a lot of it is tied to when people get any device that can allow them, to get into the metaverse, and so I
Sure.
think you're right. So, but I think that there has been a deceleration in it, and so we don't really have a lot to compare because we don't have that many apps that we can really look to see where the trends are. But I think the technology, that having AI obviously is very important, and it's needed for these apps to become more efficient and to be more personalized with their interaction with their users. And I think the VR AR is actually implemented in the apps themselves. So I can't necessarily speak to some of the apps you might be thinking of, but we see VR in apps like Wayfair and an Ulta, right? Part of the virtual reality and seeing where the furniture is in your house or seeing how lipstick looks on your face. In those ways, it's become a huge part of digital and a huge part of mobile and m-commerce, right? So it's already becoming integrated in the apps themselves because, again, they're trying to build the bridge between the physical and the digital. And the way to do that is you have to feel like you're actually somewhere else, right? And so we're seeing that in the apps in that sense. If that makes sense.
Yeah, no, it'll probably get more interesting later this year if and when Apple launches theirs, and then also, last year holiday season it was the same device for Meta Quest, right? So they still had the Quest 2. This year, apparently they're going to launch the Quest 3. We'll see when that comes out. So that'll I think will be a pretty interesting time for the data to see if that actually excites people at a different scale. Yeah, I mean, AI, anything you have there? I know. There's the lenses of the world, AI lenses, and chat GPTs have been soaring
Yeah,
through the.
we have some data, but it's. I think that overall they haven't done as well recently as I think they had in the past. But I can definitely send you more specific data. I don't
No,
have like really in-depth data on me that would be, super current.
cool. Well, we'll end there. I want to give you a second to
Yeah.
tell everyone, where to find more about you, where to find your research, but also, to learn more about Sensor Tower, assuming, they're more interested in, getting access to everything you do.
Yes. So, of course, you can go to sensortower.com, and then on our website, you'll see the different types of data that we have and a link to our associated company, which is Pathmatics, which is digital marketing data. A lot of what we write now, the data analysis that myself and my partner do typically are for our clients directly, but we have a lot of other insights folks who are working on things that can give you a lot of color on the different apps and industries that you are looking at. But we have a lot of data that you really can't get anywhere else, from churn data, customer behavior, how long are they on the app, what's the average session, how many sessions do they attend. So you really get to go beyond downloads and MAUs, like how engaged are these customers, right? And again, that really tells you the success of the business or the app or whatever you're looking at. So that's
Right.
what we're trying to do.
Cool. Well, Seema, Shah, everybody, I appreciate you coming on and sharing all your knowledge and information, and hope to speak with you soon. And thanks for everything that you do.
Thank you.
All right, Brad Hussey, welcome to Avory Idea Day. We're glad to bring you back on here. For those of you that don't know Brad, go check him out on some of our other episodes. We had him last year, really speaking around, website builders, Editor X. He's a brand partner there for Wix. For today, we want to talk bigger picture about the creator economy, some of the tools there, some hot topics around AI. You have a strong opinion there. And then, as always, go deeper into what's going on at Wix's product Editor X, just given where you sit. But before that, let's get into your background, yourself, for those that don't know, the channel you run that's successful, and anything you want to share.
Yeah, appreciate it. Thanks so much for having me on again. So I'm a educator, content creator, marketer, designer. I've been running an online business for over, well, about 10 or 12 years now at this point. So I've seen a lot of change, and I've experimented with a lot of things, lots of things that haven't worked and a few things that have worked quite well. So it gives me a bit of a broad perspective. And with tech and creativity, everything's kind of changing and evolving. So in a nutshell, right now I run a YouTube channel and a community in partnership with EditorX, helping them kind of reach a creative audience that I have access to, teaching more about the product, showing how you can use it, push the limits, things like that. We're building the Creative X Crew, which is a community for professional creatives, designers, developers, freelancers, and agency founders. Help them kind of get better at business, marketing, building sites, help them understand how to use EditorX. So that's a big focus what I'm doing right now. It's a lot of content creation. I do some coaching here and there as well for people who need a little extra help. But that's kind of like what keeps me busy right now. Yeah, so that's me right now.
Cool. Yeah, and I know you have 600,000 students, I guess, across your Udemy course. So that's pretty cool, and we'll talk, maybe share a little bit around that. You have clearly some industry awards. And I want to throw this out there for your own sake, yeah, so people can understand. You're being a little bit not throwing yourself out there, but Dribble awards, different awards from those different programs that exist. So I appreciate that. Turning to today, I think some of the major investment themes for us really revolve around digital work, the digitization of everything, at least anything that can be digitized, is the way we kind of think about it. And in some ways, all of that really morphs into what some call the creator economy. And the creator economy really comes in all shapes and sizes. This growth, from our point of view, really stems from the belief that as more tools are developed, and as more marketplaces like the Udemys of the world, where creators can go and sign up and really build and utilize the skills that they have. That could be accounting, that could be design. They really choose to branch off and self-create. You're doing that successfully versus essentially, joining the large mothership agencies out there. And in some cases, maybe you're doing that, but also having a side gig, and that's the path towards self-creatorship. We have the perfect person today. You are a self-creator. You are on multiple platforms. I speak to you on and off, offline, but let's start there. What's your point of view of the creator economy? How would you generally describe it? And just maybe give some examples of tools that really help facilitate that process.
Sure. Yeah, I'll do my best. It's kind of this revolutionary idea in the world where your expertise and what you know has value, and you now have access to leverage that to not only impact other people, to build an audience and to monetize those skills. In the past, that wasn't so easy to do. Maybe you had to know people, you had to have a certain network. Maybe you needed to start something more official in order to build your media empire, your micro media empire, be able to teach what you know. Maybe it was specifically kind of restricted to, you can book a room in the local university and teach your expertise and maybe make a little bit of money on the side. But with the democratization of these access, this way that you can get yourself out there, anyone with an internet connection could do it. And now that doesn't mean it's easy or you're going to be successful with it, but you have the opportunity to do that. And so if you know something, you have something that you have a strong opinion on, you can teach something. It's simply just giving you the ability to take what you know, packaging it in a way, in a medium that works for you, reaching an audience, and then that presents opportunities. You could sell courses, books, speaking engagements, coaching. You could sell products. You can create products. I mean, it's endless, and it's an ever-growing list of opportunity. It's just a matter of knowing how to start and doing it, committing. That's how I see it.
Yeah, no, that makes a lot of sense. So yeah, it really is. Prior to today, the skill set you had was siloed. And in some ways, it was attached to a mothership, a large organization, where your skill set was, best, I guess, used and accessed. And then today, it's many of those tools, and share some of them. You mentioned one, which is ironic. It's called Medium, right? Where somebody that writes, whether it's blog posts or anything like that, can go on there and have their opinion, and build a loyal following of some sort, or any following at all, and then monetize that. What are some other platforms out there that, obviously you're part of some of them, but that exist today that whether you use for just understanding what they do and how they do it, but then also what are some of the new form kind of platforms that you see coming to form today that maybe you haven't used, but at a high level excite you in terms of where
Yeah,
everything is headed.
Yeah. So yeah, you mentioned it with Medium. It's like if you're a writer, there's a way where you can write and you can gain an audience and you can monetize that. If you create, let's say, digital products, you want to sell that, you can use something like Gumroad. Gumroad is just a way where you could package your digital products in whatever form, and you could sell that to an audience in their marketplace. You can grow your audience. You can monetize those things. Teachable and Thinkific. These are other tools for ways for you to package your ideas and your insights into courses and coaching programs, and then sell that to an audience. Now, if you don't have an audience and you want to be able to tap into a marketplace where your ideas can be discovered, that's Udemy. There's Skillshare. And I mean, there's various other ones that, there's probably hundreds that I couldn't even list off right now, but that's the idea. That's all there. Whether you're a writer, you're a musician, whether you are an entertainer, whether you have skills, insights from creativity to business and finance. I mean, there's a way for you to package that and get it out into the world. Heck, even just YouTube. It's like start a YouTube channel and do your version of your thing and be consistent with it, and let that discovery engine bring people who like your stuff to you. And then that presents more opportunities. Well, how do I monetize this audience outside of just ads on your YouTube videos? How do you do this and you sell something? And that's like what you have access to now.
Sure. Let's go to your what you do today. I think putting, we've been talking high level. Let's get straight to how maybe you're doing this, so we can put some, have a real tangible use case of someone successful that branched off from somewhere else and now has kind of a career in the creator economy. That ironic, like looking at it, it's a puzzle, right? Where you have different outlets where you're monetizing in different ways, or building your own network to then monetize in different ways, and or just giving back and sharing knowledge that you've built up over time, which is goodwill, which could help facilitate some of your growth in the future. Let's go straight to you. Like step back, look at your magic quadrants of where you sit today, and just share a little bit of the details so we can get the insights of Brad Hussey.
Sure. Yeah. Okay. So starting out, I just freelanced and I got web design clients, and you sell your time for money, you sell services, you fixed rates, whatever it is. And so for me, it was like, how do I teach what I know? And so this is going back 10 years. I started some courses on Udemy, and then those slowly started to grow, and then they eventually took off. And so that's been a wonderful gift for not only my family, but for the business, and even more so realizing the potential. I can create something and it could really matter and it could affect people, and then I could also make money from it.
And what kind of course? What was this course or these courses?
Yeah. So the first course was just teaching people how to take a Photoshop design and turn it into a website. And then incredible. That started to grow. And then people were like, well, how do you make a responsive website that works on the phone? I was like, okay, well, I'll do that. And then it was like, well, how do you make it so you can have a blog? I was like, well, let's do that. And so then
people were asking you questions, and then you made a solution to or answers to their questions. Cool.
Yep, exactly. So then that just prompted my content creation, and I created courses based on popular feedback. And then that would help create a new product. And so I would do that on Udemy, and that started to really grow. And so from that, I realized there's a value in an email list. So on Udemy, you don't own the emails of your students. You're in a marketplace. So people were looking for me because of this. People were following my stuff, buying my stuff, and they're like, I want to read more about Brad. What's his blog? So then I started to realize I should probably blog and get some emails so that maybe that has some sort of value. So I did that. Capture emails, create a newsletter, keep people in touch with you personally, or through your business newsletter. And that creates more opportunities. People email you, they give you feedback. And then you realize, you know what? There's a lot of these web designers who want to learn about the business of web design. How do you get clients? And so that prompted me creating a new course and coaching program that was off of Udemy. That was just on my own sites. And so then that started to become more of a thing. And then as I was, creating content for free, say blogging, emails, YouTube, and then Udemy courses, and then my own courses offsite with my own websites, that started to create value around my personal brand. So that started to, I started to get more and more valuable. And so what that means, and I didn't realize this, is with the creator economy, there's this whole other segment where brands, products, software companies, startups that would traditionally use ads to get people to know about their product, they are starting to realize that creators are very valuable. And instead of buying ads, which is like a one and done thing, it's more and more expensive, you can invest in creators and it could be as simple as a sponsored video on YouTube. We all see it. This video is sponsored by such and such. Thanks to such and such for helping us create this video. Now we have this awesome video. We bought a drone and we did this cool thing. So great, we get how that works. But even more so, instead of buying one-off sponsored videos, they can invest in a creator and go, let's partner up and we'll help you do your best work for your audience, which is complementary to our product or our service and our brand. So we're all in a good sort of symbiotic relationship here. We help you to help them better, and then they see us in a good light. We all kind of help each other out here. We grow as you grow, as they grow. So it's kind of like rising tide lifts all boats. And so in that scenario, I never realized that was the case. And so over time of building an audience and creating value, having access and influence over a group as this micro influencer, let's call me, that has tremendous value to other brands who would otherwise have to be paying a lot of money for ads for people to go, skip. But now they go, wow. Like we were talking just briefly here before the call, like about the setup. I've got incredible studio equipment that I would otherwise not have invested in. But now I have that capacity to go like, I want to create the best content. I want to create the best training. I want to do the best interviews. I want to do this really well. And for me, that's having good equipment, good planning, good training, good writing, all this stuff. And so that wouldn't have been possible had I not have realized that what I'm doing has value and worked in partnership with Editor X to be like, okay, let's create a great community and create great content. What do you need? Let's do it. So that's stuff that I never saw coming when I just said, let's create a Udemy course, because that sounds like a great way to make some passive income. Turned into something entirely different.
Yeah, no, it's fascinating. And the beauty of it in some ways is it's highly organic in terms of how you build your company, as opposed to, working at a large organization where maybe there's politics involved of how you climb the hierarchy of within a company, as opposed to, you're creating your own organization across multiple different channels. If you had to step back though, think about where we are in that process and journey, outside of even your own personal, where you are today, whether you're comfortable, whether you want to continue to, add new features, functionality, new platforms and such, where do you think we are in that journey? I like to use baseball as an analogy, but, innings from, 1 to 9, 9 being the last, obviously, where do you think we are in that self-creator? Some call it the passion economy, because essentially you go after something you're actually passionate about instead of something that you're good at, but merging the two where there's passion and, skill. Where do you think we are in this, perpetual journey towards self-creatorship?
Mm-hmm. I think that it's a great question.
I didn't prompt you for this question though.
No, yeah. So now I'm thinking my mind's spinning here, but I think that that we're probably just seeing the beginning of it. Like it seems like we've seen a maturation of it and been like, oh, I see how it works. We see the landscape. The fog of war has lifted. We see the whole map. I don't think so. I think that it's like this is the infancy of it. And when I started, it was just like the early infancy, like the early adopter. Like Udemy wasn't even really that big of a deal. It was like kind of like a ordinary looking site that seemed like, I don't know, maybe they can help me sell my courses or something. Right. It was just there was not much to it, but now everybody knows. Everybody knows. Like it's a totally different thing. And, there's all these new companies that have popped up as a result of the creator economy. So we think that, oh, it's so big. There's lots of influencers and creators. And that's a term that we use now, creator. Before it was like blogger, who also sells a course or something. But now we have creators. You're on TikTok. You're on this social. You're doing this. Maybe you sell services. Maybe you're a food creator. Maybe you're a finance creator. Like we think that it's so mature now. But I don't think so. I think that there's a lot more to it. And it's becoming more and more established and there's going to be more opportunity, because what the work that we're doing now. So like the seeds that I were sowing 10 years ago, I'm seeing the fruits of that now. Like that commitment to starting to create content and to create a course on Udemy. It's because of that over time, today, I was seen as valuable to a brand who was willing to invest in me so that I can be the best version of my business, so that can have this relationship. That takes time to mature. So the stuff that we're doing now, that creators are doing now, that I think in 5 years, in 10 years, with a totally different technological landscape, with AI and everything that's happening right now, and the speed of technology, there's going to be like new businesses, new opportunities, new ideas, new concepts that we haven't even thought of, that are going to be like ways that we're incorporating this into the creator economy. So I think that like, if we're going from that, like, 0 to 9 sort of thing, we might think that we're close to the end of it and we've kind of seen it all, but I think it's like, we're probably at the beginning.
Yeah, no, I agree. I mean, if you step back, we're only like 2.5 years removed of putting a camera essentially in everyone's household, because we're all locked down, and really, turning on the spigot of, I can create in some way. I'm forced to create in some way at that stage. And, I think that opens up the door for someone to continue to plow down, that self-creator path. At the same time, I think, as we go through our investment trends, right, we're thinking of, how do we get to a place? And one of them is really around payments. And we had a conversation with someone around payments, and, how just payments is an unlocking mechanism for some of this stuff, whether, you're on Spotify and you're simply just getting a tip for making a song on there through Cash App, right? Or on Twitter, within the last, several months or so, where you can, connect some form of payment, or even Instagrams and TikToks and such. YouTube has been one of the early ones of, cross monetizing with their creators. But really, all the other digital platforms out there are still in the infancy and trying to figure out how to make that model work. Which I think, again, once that unlocks, you get, the opening of, dollars and cents and passion going for those dollars and cents. I think that's where you get, this powerful force. You spoke about it a second ago, which was AI. And I know you've done a lot of thinking here recently, and it has an interesting, value add, I think, to art, design. We've seen some of the apps in the App Store that have just soared, and then whether, have died down a little bit. But, I think we saw the original demand for these things. How do you think about AI broadly, specifically as it relates to, at a high level, let's say, and then let's work our way into how it deals with, content design, and specifically your arena?
Yeah. Okay. So I think that this is another thing that we're seeing the sliver of it. And the fact that we're talking about it, like, it's pretty common for us and for anyone listening who thinks that they know a good amount about AI. We're like the edge case. This is like super early adopter. We're like most people, if you were to talk to just like an ordinary friend of yours over at like a dinner, they'd be like, oh yeah, AI, that's like where you create funny cartoon versions of your face. You're like, oh, I know way more about this, and I'm obsessing way more about this than the general public. But that's starting to change. And then eventually it's going to be more widespread, with Bing and their AI powered search engine that's, you're on the wait list for, and ChatGPT and Midjourney, all these things. So I think broadly it's going to be one of those things that you look back on and go, wow, that was huge and changed everything. Like the internet, like the computer with a mouse user interface. We're having conversations right now that I think we'll look back on that will seem comical, where you look back on interviews of people who are talking about the internet, and they go, the internet, like, oh, what are these weird young kids doing? Like making this thing where you can access a document on a computer and share it. What's an email? And they're talking like it's like a throwaway, like silly little thing that like geeks are coming up with. And obviously, like, look at it now, nobody lives without it, or at least most people don't. So I think it's one of those things. We'll look back and go, we'll be saying like, what's AI? You can ask ChatGPT to do what? And then we'll look at it and go, oh, wow, that was almost cute and ignorant. How silly that was, that we just thought it was something so silly.
You had to search for your own answers on Google search.
Yeah, exactly. So I feel like it's it's going to be huge. And so I think that there's a doomer view of it, and then there's maybe more of like an upside view of it. I think the reality is with any new advance, there's going to be tremendous good that comes from it. And there's also going to be a lot of bad that comes from it. I'm sure when the printing press was invented, it created opportunities for bad people to do bad things at scale. You know, the internet, I'm sure it created, and it has created opportunities for bad people to do bad things, to spread bad information or whatever. But what else has it done? On the flip side of that, I think it's dwarfed that with positivity, with access to information, with access to opportunity, with wealth creation, with information that people otherwise wouldn't have access to so that they can make better choices personally, professionally, and however. So I think AI has the potential of being something like that, to making people's lives better. Of course, there's going to be people who have more malicious intent, and that needs to be battled against. And that's going to create more opportunity. How do people be secure with AI and to make good choices with AI and to educate the students to use AI responsibly and all of these things? So broadly, I think we're seeing the tip of the iceberg, and the conversations we have now in 5 years from now will sound like almost goofy. Everyone will understand it better, and we'll be like, wow, that's so funny that you talked about it like that. That's how I think about it in a broad sense. Now, in a more micro specific sense, the way I see it impacting decisions that I do in my business and ways that creative entrepreneurs, creative professionals, and anyone kind of running a more solo business, I think it has massive, massive implications, and also on everyday people. So here's what I think. I use the analogy, I have a video coming out soon about, is ChatGPT making us dumber? Is it making, someone asked that to me. It's like, isn't this just making us stupid? It's making our cognitive ability, less demand on our cognitive resources, and you can just have it journal for you. You can have it summarize for you. You can have it come up with your meal plan. You can do this, you can do that. You can basically like delegate that to AI. So what is that left up here? Isn't that just making you more dumb? So then I thought it through, and I think in some senses, sure. But here's what I actually think. So I'll try and keep this concise too, so it makes a lot of sense. Lumberjacks, let's use a lumberjack as an example. Prior to power tools, it'd be a big, strong dude with an axe chopping trees down. Now, with the advent of power tools and a chainsaw, you don't need to be a big, giant, strong dude chopping trees down. In fact, it doesn't really make a lot of sense. Did it get rid of big, strong dudes or muscular people in general? No. So with these power tools, you can do this job more efficiently and arguably more safe. Now, does that mean everybody is weaker? You know, like, and I'm using the lumberjack, but you could say in a full general sense, we don't require the use of our bodies in a muscular way, in a strength way, like we did 50 years ago, 100 years ago as humanity. Does that mean we're all weak, little shriveled up, like unhealthy things? No. It means that we have more autonomy about what to do physically. So we get to choose to exercise. We get to choose to have a healthier lifestyle. We get to choose to eat bad or eat well or do this or do that. We have more autonomy over our physical lifestyle choices. And so you can choose to be a healthier person, or you can be lazy about it. So when it's not required of us, now it's more in our court. What are you going to do about it? So I think with our modern world, it's like we're the lumberjack and we're wielding an axe, but the trees have gotten bigger and more plentiful and harder to chop. And now a chainsaw came along, and we have this power tool at our disposal. So a couple thoughts here. Now with the information overload that we have in our modern world, with our devices, notifications, tech requirements, our to-do lists, like our productivity hacks, all these things, that's us trying to combat the overwhelm cognitively that we are experiencing. And there's no way out of it. We're all trying to deal with it, and we're anxious and we're upset, we're stressed and we're tired and we're overworked and burnt out. It's because we're trying to chop down giant trees with an axe. I think that AI is kind of like our power tool. And now we can elevate ourselves to be able to combat the cognitive overload that we are experiencing. So I think that's a good thing. I think that now that frees us up from all this overload, you know, summarizing articles. I need to do quick research on a person I'm interviewing. So here's their bio, here's all their courses, here's their recent talks, a transcript from their YouTube video. Put that in here, give me a summary, give me some quick tips. What are some questions I should ask them? Great, that took me 5 friggin' minutes. Now I can ask good questions and have good conversations without spending a week of my time researching myself to the bone with everything else that needs to happen. So that frees me up to have more autonomy over what I do cognitively. So if I want to sit down and journal or do creative writing, or like ease my mind and not think or meditate. Now I have more capacity because I have these power tools that are able to chop down the trees for me without me having to do that with an axe. That's how I see it. So we have the choice now. You can be mentally, like cognitively lazy, but it's your choice now. Before, we were required to keep up or be left behind. Now we can use this power tool to our advantage, lighten the load cognitively, and now it's your choice. You could be lazy about it mentally, or you can be forward thinking and exercise. That's how I see it.
Yeah, no, it sounds, the keyword there is really sounds around productivity, where you can be more productive and possibly even, using some of your examples, strategize more, relative, so you could actually, let's say you're a designer, you can maybe do 4 projects instead of 3, or you can do 3 projects, but then do those 3 projects with a higher level of strategy, because maybe you have a little bit more, work that's being done by the AI. So you can strategically think a little bit more broadly, and or you expand the depth of these projects that you're working on, which in turn, could increase the dollar value of each project. Something like that. Again, we're just talking one off here, but spinning it to the last couple minutes here. Obviously, want to get a sense of Editor X from Wix, your brand partner there. Wix in general has I bring it up because, we're investors in there. So, full disclosure there. But at the same time, and this is not a recommendation, but it's at the same time, they've embraced obviously the creator economy, in terms of having people build their sites on their platforms. So have some of the others that they compete against. But at the same time, the AI capabilities, whether it's, artificial design intelligence, where, this was like 5 years ago. And, it's AI where, you put some information in and it crafts a website that is, generally in the right direction, of what you're trying to build. Now, next step was Editor X, which is much more, developer centric in terms of how you build. There's a lot of developers out there that want to create, but also don't have design skills. So give us a, high level view. We spoke 6-7 months ago, trends within Editor X sounded fairly robust. We participated in the event that they had, it was like their code event, 3-4 months ago, 5 months ago, time's flying. But just general trends, the ecosystem, the community, on Editor X.
Yeah. So Editor X is like, with the whole idea of automation and our discussion about AI, the whole idea is about like automating and being more productive. One of those discussion items, one of those things that bubbles up to the top is no code. It's the same idea. So no code is kind of like that power tool that now democratizes the access to building websites and building a business, building an online business and using these tools, which otherwise required a developer or programmer, or for you to go out and learn how to program, which if anyone's ever done that, it's really hard to be good at that. And now you can build sites, you can build e-commerce sites, you can build, membership sites, you could sell products, you could sell your services, you could do calendar bookings, you can build a business that's based around serving hotels, restaurants, like creators, coaches. I mean, the list is limited to your own imagination of what you want to be able to build. Before, you'd need to know how to code to do most of these things well, or to create a stable, secure version of it if you wanted to like capture payments or something like that. Or you need to pay a lot of money for somebody reputable to do it for you. But talented developers and programmers at Wix and Editor X built a product. And there's other tools out there too, like, because no code is a huge thing. There's lots of no code platforms popping up left, right, and center, trying to get their slice of the pie and create, their own take on it.
Sure.
And so with Editor X, it's like that barrier has been eliminated. And so a freelance web designer who wants to be able to, let's say you're more creative, and then I'll go to the more technical in a sec here. So you're more creative and you're like, I got a client who came my way and they want a booking system, or they want to be able to sell their products and capture inventory and do like sales and taxes and inventory. And it's way over my head, but it's a good client and it's going to be a good budget and a great opportunity for my business. In the past, so when I would freelance and get clients that would come along, that's way outside of my capabilities, I'd either have to say no and miss the opportunity and building the relationship with that potentially valuable client over time, or say yes and scramble to find somebody to do it for me and to subcontract and usually pay a lot of money. And so my profit margin would be pretty low so that I could satisfy the client. And that was really stressful. Whereas now it's like you could go, yeah, I can do that for sure. Because now you don't need to be a programmer to be able to build this solution. You can use Editor X and you could build your vision that matches with your client's needs and add more value to your clients. So it's made it more accessible to that creative person who needs access to more technically advanced components and features that would add value to their clients. That's a good thing. Now, let's say you're technical and you understand how to do that. You can write that code, but you're not really a good designer. Well, using Editor X, you can use the components, the drag and drop, the templates, the features, the pre-built assets. They've got education. I create content on the channel. They've got courses in their academy showing you like principles of good design. And if you need to manipulate with code, you can do that with Velo, which is their developer tool. So it's like, it really does serve them both quite well. It frees up developers from needing to do unnecessary amounts of code, and it frees up creative professionals from requiring a programmer to build out their vision. They could do it themselves or build an agency around it. I mean, it's like, it's the whole no code idea. It's the same idea. It's democratizing access to technical principles and achievements that would otherwise be reserved for a select, very intelligent, very skilled group of people that are either hard to access or expensive, and you can't access that. But now it's like, now you can do it. You can create that automation. You can just do it yourself. You could build the site. It's like, and it's not replacing anybody. It's just replacing the need for unnecessary like workflows. Programmers can now create amazing solutions instead of being like, fine, I'll do another e-commerce plugin for you. It's like, no, now it's like, it's blown it all open and there's opportunities left, right, and center for everybody.
Got it. No, that makes a lot of sense. And it perfectly, fits in with, some of the AI and some of the, the toolkits that are out there for creators. We'll end there. I wanted to give you a second to share where they can learn more about, what you're doing. I'll put some stuff obviously below, which highlights, the Udemy course and anything that, finds their ways to all the different segments you're part of. But anything at a high level you wanted to share before we run?
For sure. Yeah. If you want to check out some of my content on YouTube, we've got a lot of great stuff coming out there every week. It's just Creative X. It's on YouTube. And then our community that's associated with that channel is called the Creative X Crew. So it's for creative professionals and web agencies. And that's just creativex.show.
Awesome. Cool. Well, Brad Hussey learned a lot about the creator economy, how you're doing it specifically yourself, some of the toolkits that are out there, what you think about AI and how that potentially unlocks productivity, which unlocks either, headspace or, more time to do more things. I appreciate it. And you know what? We look forward to having you on in the future. And yeah.
Likewise, Sean. Thanks so much for having me.
All right, Brad. Have a good one.
Cheers.
All right. We are here with Sean Saint. He is from G2. He is head of or manager of, their database solutions group. G2, if you don't know, we use it a lot, but it's one of those companies out there that, has all the data around, some of the emerging trends within software and other categories specifically. I'll let Sean, explicitly talk about those. But, Sean, welcome to Avory Idea Day. We're glad to have you on here. With kind of before we get into some of the work, what I wanted to do is give you a moment to talk about G2. So for those that aren't necessarily aware of it, and, some of the growth trajectory you guys have taken place over the last several years as well.
Yeah, absolutely. First of all, thank you for having me, and great name, better spelling. I think that's how we got introduced to each other over that tagline. But G2's been around for a decade now. We are where you go for software, right? So typically your software journey search starts at Google, or it does today. It may change in the next months. And you search, hey, what's the best marketing solutions tool for a small business hairdresser, right? And you come across G2 and you interact with our 2 million plus reviews. So at its core, we're a really large review site with verified reviews across every software possible, right? So because we have so much content and because it's really easy to find online, we have about 80 million buyers coming to G2. across 2,500 categories and about 100,000 software companies. So what we're going to be talking about today is taking a step back, looking at all this data from a top-down level and saying which categories are poised to break out this year, which products are poised to break out, what are some of those data-driven signals that we're seeing across enterprise software companies, whether it be Monday.com or small startups who will be household names by the end of this year.
Yeah, no, definitely within our workflow for research and investing, it's definitely part of the process. Years ago, before I think you guys have totally made a vertical product for the investor group. But in general, I think it's really a good place to find emerging trends, find category leaders, and specifically why. We can start there. Let's start with the categories. What categories, as we exited 2022, we're here in 2023 now. What categories do you see on the platform that are showing strength, emerging specifically, just everything overall?
Yeah, no, absolutely. I think one category that I'm bullish on, and I think the data corroborates this, is digital communities. So we have a whole category based off of software tools to enable that community building, right? Not dissimilar what you're doing on the show and during this day. The business goal, of course, is there's a lot of tailwinds right now. It's hard to retain customers, probably harder to bring on new customers this year. So as a solve, organizations are leaning into that community, right? And are building those sort of broader bases of folks. Apollo actually just hired a VP of community. Apollo is a massive competitor to Zoom Info, and I just noticed that online today. But some of these tools are actually unlocking a lot of value for the organization. So I'm actually going to share with you a couple of verbatims that we have from reviewers highlighting the value of digital communities. So one individual said, "We built a community of almost 40,000 super fans and brand advocates that help fuel our marketing strategy. These insights we were able to garner from the platform are unmatched. We even created an entire new product line based on the insights we were able to connect from our community," right? So I think at its core, build a community, try to grow retention, right? But they actually figured out a way to quickly unlock a ton of customer insights and build some new product. Another item is kind of a different problem that they're solving, but you can match up super users of tools, and that becomes kind of your crowdsourced support help, right? So online community is solving the issue of members connecting with each other in a meaningful way. It provides their members a platform where they can network globally in real time and allows them to problem solve together, not to mention share resources. So I see this category growing, continuing to grow. It really took off after COVID. So we saw reviews double the subsequent years after COVID started.
Got it. So these are, community building, going from the large communities of the Facebooks of the world and narrowing these into smaller groups. That's kind of the main trend that you're seeing in this category, or why this category, I guess, is, taking form and growing.
Correct. Yeah. Yeah.
Cool.
Yeah. I thought that I thought that was a non-obvious. I can't not bring up AI and generative AI, of course, too, when we're thinking about what categories are supposed to grow. This actually saw a big surge in these products even before kind of 3 months ago when ChatGPT's kind of most recent version came out. So organizations like Ryter, RYTER. So if anyone's kind of a VC and they're looking to uncover some of these organizations, that's someone that came up within AA writing assistance. Write Sonic is another one. Jasper is another product. So those three are all verticalized AI tools, right? Whether it be marketing copy, sales copy, customer service copy, they're all kind of tackling this seemingly mundane task, and are resonating with buyers clearly.
Got it. So we have community, we have generative AI. You've seen that. We spoke with Sensor Tower around app downloads and such as well, and they echo everything you're talking about in terms of just the growth of AI. Obviously, you can't not go on Twitter or anything else these days and not see a thread of a automated created Twitter thread, or even on LinkedIn or anything like that. But that category in general. I don't know if you can see the size, how wide these categories go. Is there anything around, AI where you've seen it go beyond, some of the other categories in general? How wide? Because AI is a tool or a feature in a product, generally speaking. it's becoming more of a product. How we're seeing it now, how we actually interact with it. But I'm trying to think about, how wide like AI can be and proliferate across all the other categories, or is this like a designated category within G2?
So this is a designated category within G2. There's 150 products today within the category. I would be surprised if that doesn't. I'd be surprised if two things don't happen in 2023. One is this number doubles, right? And two, the category breaks out and we go more vertical, right? So one of the interesting things about G2 is we have a rich hierarchy of products. And it's interesting because of the folks here think about a taxonomy in their own head or have it in Excel or whatever, right? And so ultimately what's going to happen within this category is we're going to break it out by use case or vertical or job function, right? So what are how can generative AI help customers or internal collaboration, right? So I'll be keen, and I'll certainly share with you updates, and hopefully you can share with your broader constituents how this category has changed. I'd say another category, similar concept, is conversation intelligence, right? So if you think about kind of Gong or ZoomInfo, or not ZoomInfo, Chorus, which was acquired by ZoomInfo, these tools are mission critical for sales folks, right? So for those who aren't familiar with them, they listen to your call, they transcribe your call, they coach you. It's a massive unlock for onboarding individuals and for teaching sales reps the best ways to engage with the customer, and how many questions to ask, which questions to ask at which stage. Now, this sort of technology is also expanding across departments, where at first was sales, but now we have a couple tools broader in that space that have become one of the fastest growing products that we have, right? So Fathom is an example. This is more for internal note-taking, internal meetings. I would imagine everyone on the line has committed to or seen people commit to things in internal meetings, and that just sort of falls through the cracks, right? So again, I see it very similar, right? Because you're providing pretty rich, specific automation help, right, with mundane tasks. So that's another category I really like, the conversation intelligence, just because I've used it a ton.
And Fathom, that's the. I think I saw it on one of my last, conversations I had with somebody where they were note taking within a Zoom, right? So they added their Fathom, or I guess maybe would be the way to phrase it. They added their Fathom to the Zoom call, and then I guess it transcribed the meeting thereafter. Obviously, Zoom now has their own like sales intelligence built in the product. At a high level, how do you think about that? Because again, we just talked about AI, and then even conversational AI, which again is now you're taking a core, technology and then moving it kind of like you said into different types of products. AI and conversational kind of note taking and things like that. Like, are these your history of watching some of these companies morph, like ZoomInfo buying a Chorus, right? You're seeing companies trying to go from like singular products to broader platforms in general around like conversational and also some of the generative AI stuff. Do you think this becomes does everything migrate towards the platform again, or do these continue to be kind of that best in breed solution? And you probably see it a lot again on the platform. We were talking offline around like Monday.com, and I'm assuming we'll talk about it, but platform versus best in breed solution, just specific to the last two categories you mentioned.
Yeah, my gut says it's the platform. I'm not an investor or anything to that effect, but one example of that is Gong, actually. So the unlock that I think Gong's going to have, and where they're going to see even more disruption in the space, is through sales forecasting, especially this year, right? We always hear about it. I'm sure you hear about this on our earnings calls with CEOs saying, "Hey, it's harder to get deals done. Things are slowing down." Sales forecasting has historically been kind of finger in the air, gut feel, right? And it probably changes by manager to manager, and scaling that becomes difficult, right? And if you're a public company, you that's concerning. Where Gong is interesting, right, is because they have this conversation intelligence and they're sitting on a gold mine of data, and now they're going to start to be predictive of saying this sales rep may be under or over committing her number, and we know that because her peers are hearing the same thing from buyers, or did hear the same thing from buyers 3 weeks ago, and they closed the deal, right? So it's going to be less gut feel, and it's going to be more taking all that content and turning it into other insights for cross-functional teams, right? So Gong at its core is helping typically the manager or the IC get better at their job. Now it's going to be helping that RevOps individual whose budget is tied towards a forecasting tool, right? As well as a CRO, and I think it's going to get even higher. So that's one example. And I also think the companies that have been doing quite well on G2 are those, if we were to expand just beyond those two categories we talked about, if we were to expand to all of the 2,500 categories, the products that are doing quite well in G2 are those products that have more of that platform capability, right? So if you think about a ClickUp taking market share from Jira, right? So we're seeing instances of engineers using ClickUp instead of Jira for their ticketing solutions. That was a revelation for me, right? If you look at ClickUp's website, it feels more front office than it does like the engineer and tech individual. Another example, of course, would be Rippling, right? So Rippling, founded by Parker Conrad, who is ex-Zenefits, their operating system, which I think is the right term for what they have today, is incredibly broad. So in the G2 reviews, we learn how folks are using a tool itself. And it's used for anything from benefits administration to payroll to single sign-on to device management to spend management, right? And I think that's only going to continue to expand. And to his point, it's kind of a compounding factor, right? As you have more and more horizontal categories, it's really, really difficult to migrate off that tool. But also, each incremental new product that you build should theoretically be more powerful because you have all this data talking to each other, right? So that's just a company that I find to really be nailing that platform vision. And again, their net promoter score is higher than the category. It's higher than most of their competitors. And they're doing things more broad. So.
And yeah, so Rippling's become pretty big, and this is we're kind of going sideways here, but I like talk about when you started to see Rippling, because I think it's the power of the platform where you start to see it become, this emerging vendor. And then today, obviously, I think they're more of a leader now, specifically just like broadly speaking. More and more people know who Rippling is, and like you said, they've moved into adjacent kind of markets, but also with one single like database or engine that powers it all. Just talk about how you saw the maturation potentially from the outside or on the platform of Rippling go from how do you use your platform to find that, right?
Yeah, absolutely. So this happened. We saw the change happen around 2020. So this corresponds with G2 reaching scale when it comes to the data that we have, and being able to visualize the G2 data, right? So as soon as G2 started to realize, hey, investors want access to all this information that we have in a more programmatic and deep way, we started building visualizations. And coincidentally, Gusto and Rippling, from just a buyer interest perspective, so number of page views going to their profile page, are about neck and neck to start 2020. Where we thought that Rippling was going to win was when we looked in the reviews themselves, the breadth of solution that Rippling offered, right? And so if you're choosing between a product that has more potential capabilities or less, and the satisfaction of the tool with more capabilities is higher, we were bullish, right? So, and that certainly has been the case. So Q2, Q3, Q4, the Rippling sort of lead has continued to get bigger in 2020, and they kind of haven't really looked back since. So.
Sure. No, that makes a lot of sense. No, thanks for that. Going back to the categories, I don't know. I know you had. There's a bunch of categories that you guys have clearly. Any other categories come top of mind to you that you think are trending in the right direction?
Yeah, absolutely. So what's cool is like you can see the maturity of a category, right, by new subcategories. So cloud cost management is something that we're hearing more about, right? So they've seen about a 400% increase in interest in the last 6 months. How do you optimize the spend that you have, right, with cloud broadly? So that's something that I'm excited to continue to monitor. They actually started to tick up in 2022 and then accelerated. And I would imagine everyone's looking to be more efficient this year. And I think some of those tools will continue to get more exposure. ESG, of course, is something that we're monitoring and tracking. ESG is incredibly broad. It's almost like by design. But we think about those in a couple of subcategories: sustainability management, environmental health and safety, as two of like the flagship categories within ESG broadly.
Okay. Yeah, no, the cloud optimization one makes a lot of sense. It's actually pretty interesting that so ESG obviously was very, very top of mind, 3 years ago, and it's still it's like very top of mind. I'm talking about just inflection points. I think inflected like several years ago, but it sounds like more and more tools are being created, so the category continues to expand at a probably a slower rate, but still pretty fast relative to the other categories. That's what you're inferring.
Yes. Yeah.
Nice.
Exactly. Yeah.
Yeah, and
There's
then
just
the
more
cloud
point
optim.
solutions.
Say that again.
There's just going to be more specific solutions. When you think about ESG, you got to unpack a lot,
Sure. Yeah.
even within E, S, and G. And so that's what we're seeing is there's more specificity when you go to something like ESG on G2.com. Instead of just having 15 players, right? There's 4 or 5 or 6 subcategories and more of those very discrete use cases. Again, as that concept continues to mature.
Sure. Yeah. So I don't know if you have any other categories, but we can move into you've spoken a lot about a lot of the vendors. But getting into some of the emerging vendors, maybe some of the vendors that have consistently held their own, like the ServiceNows of the world, a platform type of product company that has continued to hold the bellwether across various areas of software. Speak to some of the emerging vendors every year. I think you guys just published the top best. I don't know the exact title of the report, but it's your top software vendors, and then you have emerging and trending and many other ways to slice and dice like the data.
Yeah.
But share with us a little bit about what you've seen at the end of last year, at the beginning of this year, in terms of some of the vendors specifically.
Yeah, absolutely. So a couple folks that are, I think, up and coming is number 2 on our list this year was a company called Synthesia, AI for video creation. So this is typically going helping L&D folks, or frankly, a ton of people within an organization spin up automated videos, right? So if you have to run trainings for folks, or any sort of classes for individuals, it's kind of a point and click solution that you can do. So think of like a Canva and how that helped to displace a Photoshop. It feels like this product kind of automatically generating videos is poised there. So I actually did a little demo of the platform when preparing for this. And it's literally you can choose the person who you want to speak. You tell them what to say. You choose kind of their tone. And then you can add in whatever sort of background visuals you want. So that one was, I thought, kind of interesting. Another tool I thought that is not within kind of the categories we've already talked about, right, is a tool called LeapSum, LEAPSOM, performance management. I would imagine that monitoring and tracking and having a really clear understanding of outputs for your employees this year is going to be more top of mind. So that's a product that's been growing pretty quickly. They're in the top 25 of the rankings, and we'll certainly be tracking them throughout the year. An organization that probably a lot of the folks here have heard about in the last month is Deal, European-based company that famously shared that they 5x revenue in 2022. They are also meets the requirements for being one of the fastest growing companies on G2 as well. So those are a couple companies that I'm going to be tracking, and I'm excited to kind of see. I guess one other one is, and I refer to this as as Apollo. So they just hired a VP community. But Apollo, I've been seeing within the G2 data taking market share from ZoomInfo, and anytime you see an up and coming organization take market share from the incumbent, of course we're going to have the alarm bells on, and Apollo has done that so far. A lot of it has been due to their pricing and packaging, so just getting in at a frankly a lower price point. But I know Apollo does have kind of a contributory network. Going back to the concept of community, the more users they have, the more data they can mine, the better their product becomes. So I think ZoomInfo, of course, has shown they can execute incredibly well. Apollo seems like they're they're hot on their heels though. So
we use Apollo over here. So
nice.
We're definitely part of the trend.
Why'd you choose Apollo?
Pricing and packaging. There you go.
Yeah.
You at the end of the day, you land there, you don't even have to look away because they don't make it, they just entice you to work with them because it doesn't, the price doesn't scare you away. How about that? And the product works. And so you really have no other reason to go anywhere else. So, I mean, look, you see that across the board, and you were talking about Monday.com. They have the same, Notion has the same, pricing packaging that just works right out of the gate.
Yeah.
I think that's why Zoom the video worked like for a long time is their pricing and packaging versus, the Microsofts of the world or Skypes and things like that. So yeah, no, you make a good point about pricing and packaging. If you have a great product and you have the pricing and packaging that works and, you hit it out on where you market, you got a shot at stealing from the incumbent. Look at Canva. You mentioned it before. We're Canva users as well. We're not even, we have Adobe because I feel like you need to, but to some extent. But yeah, you make a good point there. Talk about Monday because Monday reported here recently, and they mentioned actually, and I was telling you that they mentioned on their earnings call, one of the analysts asked about seeing G2's ratings of some of their newer products, which is pretty fascinating. They had a really good quarter, and it sounds like some of the evidence was on your platform. So what are you guys seeing on Monday specifically, or even that like collaboration / productivity arena?
Yeah, absolutely. So on Monday specifically, it was interesting to see that Monday has 2 of the top 10 fastest growing products, despite Monday's core solution kind of around project management and collaboration, certainly at scale. So Monday Sales CRM is one solution that they've recently released, as well as Monday Marketer. And yeah, I was frankly surprised, and I was pleasantly surprised that I found this out through the G2 data. And again, that someone on the earnings call brought that up and validated how G2 is kind of that source of truth when it comes to how's a product going in the market or trending in the market, or what that traction looks like. It's still a little early on our side to say like where are they really taking market share from. But I think to that concept of the platform sale, like if you have this sales force already ready to go and trained up, selling highly rated solutions horizontally is probably a little bit easier, especially if you already have those relationships with your customers. The project management collaboration software, kind of that space is my favorite space on G2, right? You have public companies like Asana or Monday. Smartsheet, are they public? Or they just recently go private? Or are they still public?
No, they're public. Yeah, they're public.
Yeah. Smartsheet a little bit more kind of on the more enterprise level. Trello, of course, owned by Atlassian. There's tons of organizations there. I think like I shared this before, but ClickUp doing and taking market share from Jira to me felt like something that was unexpected when tracking this category. So that to me is actually something that I'm going to be watching. ClickUp is still private, but how are they building for that different user group? Something I'm curious to continue to monitor, as well as Monday's new marketing and sales focused tools. Where are they winning?
Got it. Yeah, no, one more question before we wrap up here, which is, you kind of just said one of your favorite categories to track, and I didn't prep you on what's your favorite product, over the last year. Right now, heading into this year, what's if you had to choose one kind of company that, you're going to have your eyes on the entire year to figure out, where it's headed, good or bad, I guess. What's that 1 or 2 companies that, comes top of mind?
There's a lot. There's a lot.
I think,
I know. It's tough. I kind of am curious about the Apollo IO Zoom Info landscape. I just feel like from listening to Henry Schuck, CEO Zoom Info, he's clearly like just been able to execute and win. But it feels like Apollo is coming up pretty quick. So how does he solve for that? Especially if people are going to be more price sensitive and Apollo is cheaper. So that's one. And then I think Rippling is becoming more of that household name, right? What new products are they going to be building? Are they looking to be going public soon? How are they going to optimize for the enterprise, right? So a lot of the traction that we've seen on G2 for Rippling has been mid-market SMBs, right? If you're selling to a C-suite of a 200-person company, Rippling kind of makes a lot of sense. But for a 10,000 person company where they have those point solutions already deeply embedded, will Rippling ever be able to get there? Or are they right? Or like, what's their aspiration to go up market versus kind of the market sentiment? So
Cool.
those are a couple.
No.
I think
Yeah,
about
no,
it like sports. It's like football's over. So what are the categories?
yeah.
It was interesting.
Yeah, you should have a live bet throughout the year of, on site on G2. You can bet who's going to win that year. But yeah, no, look, let's end there. What I want to do is give you a moment. Obviously, we've talked about it a little bit, but to find out more information about what you're doing specifically and how you can help them in general. Either way, go to G2. It's really good. It should already be part of your investment process if you touch software in general. But I just wanted to give you a second before we go.
Yeah, absolutely. Will they have my info, my contact information?
Yeah. I'll put it down at the bottom for all you.
Yeah, just reach out to me directly. We package up all of the buyer data, right? So what are 80 million buyers coming to G2? What are they spending time on? Why are they spending time there? And then of the 2 million reviews, that's just sort of the tip of the iceberg. Reviewers ask up to 40x the questions you see publicly available. So again, why did you switch from a tool, right? So we saw early days Snowflake taking market share for price and product. So if you want to get in on these next transformative companies that are, again, taking market share from incumbents because they're better and cheaper, would track that in real time. So would love to connect with anyone. And Sean, thank you again for having me on.
Cool. All right, Sean, it was a pleasure. And hope to have you next year and talk throughout the year.
Absolutely. Thank you.
All right, Ryan and Go, welcome to Avory Idea Day. We're very lucky to have you on here. Just a second ago, we talked about how you were in Arizona at the Open, in real golf happening. You are, for those, I guess, that don't know, he was on here a year ago. We've followed you and your journey since then. And, he's the CEO, the founder of Golf Plus VR, or Golf Plus, one of the more successful games and apps within, Oculus Quest or Meta Quest ecosystem. Before going into anything else, just welcome to Avory Idea Day.
Yeah, thanks, Sean. Thanks for having me. It's a pleasure to be here again.
Yeah, so I guess a couple things. One, just give us an update on yourself. The people that don't know about you or the story of Golf Plus and how you made it or why you made it. Anything you can share there?
Sure. Yeah, it's been a wild year since we last spoke. But I've been a golfer since I was 11 and writing code since I was 13. So for me, this is kind of where my two ultimate passions meet. And been in tech and startups since I started my career, like 15 years ago or something like that. And eventually decided it was just time for me to start my own thing. And I wanted to do something I was really passionate about. I wanted to do something where I would be the core user of whatever product I was building. So decided to do that in the golf space and built an AR golf app. And once I realized that AR wasn't really working and it was too hard to get people to use it, and there was just a lot of headwind, ended up pivoting into VR. We launched Pro Putt by Topgolf. So we partnered with Topgolf. We launched Pro Putt by Topgolf. We then rebranded it to Topgolf with Pro Putt and launched a virtual Topgolf venue in the game. And then a year and a few months ago, we rebranded as Golf Plus, and now we're a full course experience. And in December, we partnered with the PGA Tour. So we're now the PGA Tour's exclusive VR partner for the next 5 years. And because of that, we got to build TPC Scottsdale, which is where the Phoenix Open was played this last week, one of the most unique tournaments of the year. And it was, really cool. I got to visit Scottsdale last week to check out the venue and meet with some tour folks. And it was awesome having built the course in VR, playing it, dozens of times before going out there, and then standing on the course and knowing kind of exactly where everything was, because I felt like I'd been there before and played it, in VR. So yeah, it's been a whirlwind, so far, but as is cliche for every tech startup, I feel like we're just getting started.
Yeah, no, it's kind of wild actually that it hasn't been that long since at least the name Golf Plus has been a thing. I kind of forgot that actually, as we were talking about a year ago or so, that you had just essentially rebranded and created the Golf Plus brand. I guess the part of what we're trying to do today and just immerse ourselves in is Avery Idea Day is really around some of the major trends that we're tracking or following. One of them being kind of future of computing. Another one being really around interactive, entertainment. And I think you fall within both of those, which is, you are on one of the new platforms that exist, and where this goes and where it heads. But at the same time, part of the change of platform is really around the interactive nature of the gaming console, I guess, on your head. Talk about the state of VR today. If you can remember, draw back to a year ago. I obviously you were smaller and still trying to figure it all out, but still successful, super successful then. Talk about the state of VR today. So we have a kind of idea.
Yeah, it's interesting. Honestly, the last year was kind of a bit of a roller coaster. So it got off to a really hot start last holiday season. A year ago, the holiday season was way better than we expected. We had just launched Golf Plus, but also holiday sales for every VR company were really strong. And and this last Christmas was not as strong as the year before. And that's the first time that we've ever kind of seen things trend in the opposite direction. So VR, I think VR has hit a bit of a plateau, just in terms of overall growth. And I think a big part of that is due to hardware. Kind of the Quest 2 is still the VR hardware that most consumers are using, right? If you look at usage across apps, and we have a lot of dev friends who are on different platforms, so we get a sense from them around what sales look like. And Quest 2 is 90% of sales for most of the devs that we know. And the Quest 2 came out, quite a while ago. It was 2020. The Quest 2 came out. So it's been out for a couple of years, and the hardware hasn't changed in that time. And we got PSVR 2 coming out pretty soon. Pico's starting to do some stuff. The rumors about Apple coming out, and then Zuck publicly has said the next consumer hardware on the Quest side is going to come out later this year. So I think this last holiday, a lot of people, who may have bought VR decided not to. The price of the headset also went up, which is the first time that's happened. And I think a lot of people are waiting on whatever the next hardware looks like. So I feel like right now in the world of VR, it's not as bullish as it was a year ago, where it's oh my God, everything's growing faster than we expected. How do we scale up our team? How do we get, raise money? How do we kind of throw a bunch of fuel onto this fire that's raging more than expected? And now, what we're seeing is oh, okay, maybe it's not going to grow as fast as we thought based on last year. How do we operate more leanly? And how do we kind of build, in a more strategic way to outlast however long this downturn is?
Yeah, no, that makes sense. You're hearing that a lot just broadly in tech. And broadly, across other areas as well, not just tech. Going back to the headset, because if you follow the path of historical, interactive entertainment in general, which was around, the traditional PlayStations and Xboxes, you do get historically a nice uplift each time a game console is launched and announced and put into the market. One, you get the refresh from the new from the current base of console owners, which now re-excites them to buy more games or purchase more games inside of the games in-app purchases. But also you have those that have been sitting on the sidelines. Quest 3 potentially comes out this year, and again I was going to allude to it that Quest 2 is the standard, but yet it's it's 3 years old, and we're here potentially hitting a refresh. What are you guys baking in terms of, thinking about that in terms of, sales for your company or growth of the industry? Do you think, the refresh of a new headset will play a critical, step higher in terms of the industry as a whole?
Yeah, I definitely do. I still think that we are hardware constrained more than anything. I mean, I think there's a ton that could be done on the software side without a doubt, but software, it's really expensive to build software. I know it's really expensive to build hardware, but the companies doing it are pouring billions into it. So
right.
for devs like me, the hardware is effectively free, but building software costs a lot of money. And it's hard to invest a lot into building software if you don't have that many units that you're able to ship your software to, right? That's the reason that, like, when mobile first launched, they're like these $1 apps because they don't take much time to build, and there are tens of millions of phones out there that you can sell to. VR hasn't really hit that point yet. They've done, I think publicly it's like over 15 million headsets have been sold of like Quest 2. But a lot of the people that buy headsets aren't using them on a regular basis. So you can't reach that full number when you're trying to sell to them. And, hardware builds excitement. With new hardware, there are new use cases that come out. You look at the Quest 1 to the Quest 2, and that was a massive step forward, right? The resolution's a lot better. There's a lot more power. You can do a lot more with the headset. It's like more comfortable. It's lighter weight. And I'm fully expecting to see the same kind of step function in value with whatever the next device is. And if that's the case and they're able to keep the price down, then I think a lot of people that were waiting for the next device will get this new headset, and it will have better hardware, and therefore there will be new things that you can do with it that you couldn't do with the Quest 2. So I think this upcoming holiday will hopefully be a pretty big one. And then I'm also really excited to see, what Apple does if they do release something. They're obviously, known for disrupting entire spaces. And it sounds like the hardware that they're producing is probably going to be pretty high end and pretty expensive. But if they're able to build something compelling, regardless of the price, I think it'll open up a lot of people's eyes to the potential of what can happen with VR. And I think that is going to be a really positive thing for the industry. So, even mid to medium term, I guess, our company's still really bullish, and we're staying completely focused on VR. I think this little lull is just a lull, and the new hardware is going to add a lot more fuel to the whole space.
Yeah. Let's talk about, a lot of companies, obviously, you talk about like the metaverse and things like that. There's a lot of companies that are trying to balance both, the real world and, whether it's Gucci or, one of the luxury handbag manufacturers, complementing it in like a digital version, whether we believe that or not, or if there's value in any of those things. But, you just actually spent time at the actual, open golf tournament in Arizona, and you have a really cool game that mimics it very closely. How are you seeing the combination of the real world and your game digital kind of rendering of the courses? How do you see the combination? I guess as the founder, the CEO of the company, how do you think about blending the two? Number one, and then do you see uplift around tournaments? Specifically, I don't know if it's playing that course right before the tournament or after the tournament, or what do you see in like the digital world of kind of these courses when they happen?
Yeah. So yeah, we've learned a lot just over the last couple of weeks. So this is the first time that we've launched a course where, within the first week, they're having a tournament at that same course. And, now that we've done the partnership with the PGA Tour, we'll be launching a lot more courses in a similar fashion. But in December, we launched Pebble Beach, and Pebble Beach is, top 3 most famous course in the world. And when we launched it, it kind of set new records for in-app purchase and people purchasing it because it's Pebble Beach. So we were, kind of expecting it, and it exceeded expectations a bit, but it was in line. Scottsdale, we're like, well, it's a really cool tournament. It's a great course. It's got the stadium and all these cool things about it, but it's not Pebble Beach. So we really didn't expect it to set new records, and it crushed every other course that we've done. And our only guess there is that it is during a tournament week. It was just on TV. People are watching it on TV and able to play the exact same course, be in the stadium. We built out a crowd system. And then we also launched a new feature that, as far as I know, has never been done across any other sport. And I don't even know how you would pull it off in other sports. But we launched a feature called Beat the Pro. And on hole 16 of Scottsdale, which is their big stadium hole, it's a par 3. As soon as a pro hits their shot and then finishes, putts and finishes the hole, you have the ability to play against that pro. So in VR, you're standing on the exact same tee box, same stadium around you. You see the pro shot, and you see a little video replay of what actually happened in real life. So while you're in VR, you're seeing a 3D shot trail and a replay based on where their ball ends up. We put a big target around the hole. And if you get it inside that target, then you beat the pro. Same hole, same conditions, everything.
Wow.
And then you get to hit the putt against the pro too. So it's the first time this has ever been done. The data's coming in like real time, a few minutes after they finish the hole. We've got the data, and you're able to play that exact same shot against the pro. And it was awesome. Our players got really into it. We have a lot of anecdotal feedback from players that say like, wow, like I've watched the tournament before, but I wasn't like, I'm not that into watching golf. But after playing Beat the Pro, I watched that whole tournament and I like respect it so much more. And the pros are so much better than I expected. It's so hard to beat the pro, like the putts that they're making, like this is crazy. So we've seen a lot of like positive signs that putting fans in the shoes of the pro and letting them play in the same conditions makes them appreciate the broadcast more, build a relationship with pros more, and kind of anticipate the next tournament. So we're barely cracking the surface of it, but so far the crossover is pretty phenomenal. And we get a lot of people that don't claim to be golfers that buy our game, and after playing for a little while, a good number of them say like, "Oh, I just went to the driving range for the first time," or "I'm going to go play my first round, ever." And that's that makes us feel great, because ultimately our mission as a company is to make golf more accessible using this technology, and we think showing people kind of different perspectives of golf is a great way to get them excited enough to take on the friction of enjoying the game in real life.
Yeah, where are you? That's definitely such a cool example of the combination of two, and actually just creating excitement around the whole sport in general. What are you seeing on for training purposes? There's a bunch of use cases for training in general, broadly speaking. It could be flight simulation for pilots, and this is golf simulation in a way. You've really honed in on the game side of it. Talk about whether you're thinking about more on that training side, where someone can come in there and, I don't know, potentially simulate the actual course, but for actual competitive purposes, as opposed to gaming. How do you guys think about that?
Yeah, we've been looking at our data a lot, and the two things that create the best retention for us and get people coming back are if they're playing social, playing multiplayer, playing with their friends, finding a community and playing with other people, and performance. Are they good at golf? Are they making birdies? Are they making pars? Are they getting better, right? So obviously training falls clearly into that second camp. Right now we have like a pretty cool practice mode where you can select exactly the shot that you want to practice, and we generate targets, and you can get the ball into the target and move on to the next practice next practice sequence. And then we also track all of what's called your strokes gained, which is golf's broken up into like driving off the tee, and then approach shots, and then chipping it around the green, and putting. And for every single one of those areas, we give you a score the same way that they rate PGA Tour players. So we're able to quickly identify which areas you're strongest and weakest, and then point you towards practice. With the next gen hardware coming out, it looks like mixed reality is going to be a pretty big focus of the hardware. Obviously, with Quest Pro, it's taken a big step forward with the color pass-through cameras, and our expectation is that trend continues. And with that, we think there's a lot of really cool training applications where you could be wearing a headset, see your hands, hold a real golf club, kind of get into position, and we can show you exactly where your hands should be in 3D space. So I think a lot of golfers assume their hands are in the right spot, but they may find out, oh, they're actually supposed to be quite a bit higher. And this is what you're doing. This is where it should be. And we can kind of guide you visually, which has never been able to be done in golf before. So we haven't focused our full attention on training yet, because we really wanted to focus on making it fun to play. Sure. Now that the fun to play side of it is working out pretty well, we're planning to focus more on training later this year, and I think the new hardware is gonna help us move in that direction.
Got it. No, that sounds cool. Kind of in addition to that, or like just extending that, everything you just said, was talk about the ecosystem. The ecosystem of accessories. What came to mind is are there people making hardware products for something similar to what you guys are doing, or it can be an accessory to your game. Obviously with pass through, it kind of changes the ballgame in terms of what can be done. And again, that goes down to computing power and the future of computing, which is again one of the trends here. But talk about the accessories, the ecosystem, the developers, the health of it. Obviously, I don't know if there's real numbers out there to explicitly say what's going on, but at the same time, you can probably sense the energy at the very least of how enthusiastic the developer community is relative to Quest versus even some of the other ecosystems that are much smaller. Just talk about the ecosystem from someone that's inside of it.
Yeah. So when you say accessories, do you mean like we have these, golf club attachments where you
Oh,
can?
there you go. Yeah, like an accessory like that. Yeah.
Yeah.
Okay, cool.
So yeah, there are quite a few of these. I've got a few around my desk just because I like played around with different ones. But these, these are really cool from our perspective because we haven't built a single one of these. These are all built by third parties that have played the game and are turning it into real businesses. If you go on Amazon and search for like MetaQuest, VR golf or something, you'll see pages of these different attachments. And from our data, there are tens of thousands of people that are playing with these, right? So it's like, and they're selling them for like $50 a pop, give or take. So there's like some real money to be made in developing accessories. For us, it adds a ton of realism to the game, so we're very supportive of it. And it's just been really cool to see that industry kind of build itself up from scratch and start to grow. I think accessories are a huge part of VR, and I'm hopeful that Meta and the platform companies add more support. Like we would love a world where we could attach a little sensor to your real golf club, so you can swing your real golf club and use that to play our game and have the weight and everything. I think that would be really cool. Obviously, full body tracking is another one that just as a golf game would be really cool, since a lot of your swing comes from your legs and your hips and your lower body versus just the hand and the head tracking that you get. I don't know if that's a priority for them right now. They're like, they haven't told us anything. But based on the last connect that we saw and kind of the desire to get legs working, I have a feeling that they do have some people focused on it and that we will start to see more. I also get the sense that they're more interested in figuring out what they can do with cameras versus having sensors all over the place. So I feel like that's an area that has not been as well explored as like just the headset itself and what's possible there. We're hopeful that it starts moving a little faster, because I think it could open up a lot on the training front, as you were alluding to. But right now I think the consumer hardware is, if you're a developer and you're working on a consumer app, like the headset itself is all you can really rely on. Even though we have a decent number of people using these attachments, we still have to develop the product assuming people don't have any additional hardware, because that the majority of people don't, and they just have the headset, and that's all they really they want to have a great experience without buying anything extra.
Yeah, no, that makes sense. Before we wrap up here, essentially, one one question I was just thinking about right now is like, do you actually see, and it's probably hard to track it in general because everyone's everywhere, when it's raining outside and people are getting the rain checks, do you see like an uplift in regional, or I don't even know if you have that level of granular data? I'm asking this to try to see like what things are being supplemented for, you know all the use cases, training use cases, the accessories market, the ecosystem, is it growing and thriving? And then lastly is like, what are people foregoing or replacing when they are playing this? Obviously, some people are just, entertaining themselves, but sometimes, you're going to play every Sunday and this Sunday it rains. So, you call your friends up and say, let's just mess around in here.
Yeah. So we do. It's a little hard to distinguish, but we do see a lot more usage when it's cold outside, right? So during the winter months, a lot of people can't play golf, so we see a lot more usage there. It coincides with like the holidays, so it's a little fuzzy. We also see most of our usage is at night, like between I think our peak hour is like 7 or 8 p.m. Eastern, and if it's dark outside, you're probably not on a golf course. So I do think that it is very much complementary. I don't think there are that many people who are like, should I go play a real round of golf or play Golf Plus? I think Golf Plus is great for when you can't get out onto the real golf course. But as a golfer myself, if I have the opportunity to go play a real round of golf, that's what I want to do. That's what we want our players to do. Like that is the game that we're trying to replicate. And we think that everything that we're doing is additive and can kind of help golfers appreciate the game when the reality of getting to the course just isn't possible, which is a lot of the time. It takes a lot of time to play golf, and it only takes about 15 minutes to play a round of Golf Plus.
Cool. Well, look, we're going to end there. I wanted to give you a second here to essentially share where people can learn more, if they wanted updates of what you're doing in the game, if they wanted to reach out and broadly speaking, Obviously, the game's inside of some of these platforms, but if you could just share where exactly you want them to go to learn more.
Yeah, best place is the MetaQuest store. So go to the MetaQuest store, search for Golf Plus, and we'll be right up there. Also, right now, if you buy a new Quest 2 headset, we're packaged with the Quest 2, so it comes for free with the Quest 2. So anyone who's thinking about getting a headset and interested in golf, now is the best time to do it. And then feel free to follow along on Twitter. We're Golf Plus on Twitter, and then I'm our Angle 820 or just Ryan Angle on Twitter, and we usually try to do a pretty good job of kind of posting updates and keeping the community in the loop.
Cool. Ryan Engel, Golf Plus VR. Appreciate you coming on, and hopefully we get you next year and bigger, faster, stronger once again.
Thanks, Sean.